Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Convinced it's Friday and you're all pretending it's Thursday. The week just dragging on. Live from New York City.
I think it's been a wonderful
on radio, on TV, I bet you do.
Futures
down 7 on the S&P. Negative a little more than 1/10% after a really nice lift on the S&P yesterday with a really tiny cyclical bias. Energy, top of the pile once more. Nasdaq futures down 0.2%. The Russell, negative 1/3. Can hear voices. Probably not a good thing, is it?
In your head.
Switch up the board into the bond market.
It's Friday.
2s, 10s, and 30s. Wouldn't that be brutal if you just heard Tom Keane in your head all day?
I think that everyone's choosing that.
They choose it right now, don't they? 130.56.
Yes.
I thought that was for us, Lisa.
Oh, yeah.
186.86 on 30s. Yields a little bit higher there by basis points. Tremendously difficult to do this with a voice in your ear and try and keep it going, but I'll keep it going.
Keep it going.
Steve Englander of Standard Chartered reckons that we're underpricing rate hikes over at the Federal Reserve. We'll talk about what that means for the bond market a little bit later this morning. I wanted to talk about what it might mean for this FX market. Finally, a little bit of price action through G10. Euro dollar negative by about 0.4% to 117.66. That's a stronger dollar story this morning. The final pit stop on the road, the path towards the 22nd, the next Fed decision. Retail sales and claims, Tom, 8:30 Eastern.
It's a very important. The combination of the two is a nuanced idea. We'll have full coverage with Michael McKee at 8:30 this morning. This is a great joy. Ellen Zentner, of course, is acclaimed for acuity in macroeconomics, but she needs someone who does the granular detail. He is Robert Rosner, who leads a charge at Morgan Stanley in econometrics, which means looking at the details that I'm too lazy to look at. The gentleman of details joins us this morning. Robert, I want to talk about the detail of the American consumer. That is the acclaim of you and Ellen. In retail sales, what's the granularity that matters?
Well, thanks for having me, Tom. You know, for this retail sales report, we are expecting it's going to look a little bit softer. And it's worth looking back at the month of August and the data we've seen overall for the month, which has painted a picture of two things. First is that the Delta variant and the impacts had a stronger effect on growth than initially anticipated. We saw that in the payrolls report for the month, for example, with flat leisure and hospitality hiring. And we're expecting that's going to show up to some extent in the retail sales data. The other factor that's in that is supply chain effects. And so auto sales we know are lower, and that's going to be a drag on this report as well. So we see this as being a down report for retail sales, but we do think we might be starting to turn the corner as we move into the fall.
What do you anticipate that the Fed will do on the 22nd with the econometrics, the granularity that you deal in every day? Do they just ignore it and stay at 60,000 feet, or can they get value from every nuance of this Q3?
Well, that's a great question. And, you know, we know there's heightened uncertainty. And when you think about the econometrics, when you think about the modeling, that heightened uncertainty means that there's a wide range of outcomes as they look out the forecast horizon. And that makes it especially difficult at this upcoming meeting because they extend their forecast horizon out through 2024. We know when we're looking out that far that the confidence intervals around those forecasts are extraordinarily wide. So when we think about, you know, what happens to those forecasts, what changes what might we see, we don't think there's a whole lot to change out in 2022, 23, and beyond. But this year, we know that the data has been coming in quite differently, and that speaks to the uncertainty inherent in this modeling, is that the data is going to present a picture where we're constantly having to mark to market.
So, Rob, we'll get the forecast and the summary of economic projections, then we'll get some kind of evolution of the language, the kind of boring stuff that actually ends up meaning a lot for the market when it first comes out. Rob, what are you looking for just in terms of the evolution of the language of the statement?
Yeah, the statement will be interesting because, of course, there's a few different signals we could get at this meeting. There's the tapering decision, which we know that the Fed is looking at. There's the dot plot, which will give an indication both of what policymakers are thinking of in terms of timing of hikes, but also pace as we look further out the horizon into 24. But the statement language particularly, we'll look very closely at how they signal around that substantial further progress language. We know they need inflation and labor markets to meet that substantial further progress test before they consider tapering asset purchases. Chair Powell told us at Jackson Hole that we've met that test on inflation, but they do want to see a little bit more on the labor market front. And that's where August downside surprise does come into play. And they might still want to see a little bit more there. We think the next two payrolls reports are quite important in that regard. But in terms of the evolution of the language of the statement, I think Chair Powell gave us a hint at what that might look like in his Jackson Hole speech, where he told us if the economy does continue to evolve as broadly anticipated, then it may be appropriate to taper those asset purchases at some point this year.
The chairman went on to say, try to aggressively de-link any decision on tapering from any decision on interest rates. Do you think they might formalize that a little bit more?
Well, it's formalized in a way already because the balance sheet and rate hikes are subject to two different standards of guidance. The balance sheet, they want to see that substantial further progress towards their goals. To raise rates, they want to see that they've achieved maximum employment and that they have sustained 2% inflation once we move beyond what they view to be these transitory factors that have pushed it up so far this year. So there's different tests, and they can put a lot of emphasis on the distinction between those tests. But at the end of the day, it does raise an interesting question because the decisions are separated, but we will get, an indication on the taper signal alongside a dot plot that is going to give us a sense of where policymakers are on the timeline of when they are thinking about raising rates.
Robert, can you just take a step back and give us your assessment of where we are on the stagflationary type of debate that keeps going on in the background as we get some of these high inflationary reads and softening consumer sentiment?
Yeah, so I think, again, it comes back to this retail sales story. The August trend looked soft to us. That's why we're expecting the report released later this morning is going to be a down report. But we do still think that the fundamentals are there to support a rebound in consumption as we're moving through the months ahead. So when it comes to resolving these inflation versus low activity issues, a lot of that comes down to supply chains beginning to open up. And we are expecting to see incremental progress there, but that certainly does remain an issue. What I would say, however, is that we got a sense of how things are looking in the inflation report, the CPI report that we got earlier this week, and it did suggest that some of those inflationary pressures, at least on the margin, cooled a little bit in August, and that's something we have to watch in the months ahead as well to judge whether or not we're going to get a second wind from those transitory effects that could potentially re-exert themselves as we go into the end of the year.
Robert, this is a controversial point. A lot of people pointed to the CPI print and said, this feels inaccurate to us. Take an example of rent and how much they said it was increased versus market gauges out there that said that it increased many times more than the CPI print. Meanwhile, people looking forward at the housing prices going up and how much rents are likely to follow. Do you think that this CPI print and the way that it's calculated is misleading?
Well, there's lots of technicalities around how the rents and owner's equivalent rents data are computed within the CPI, and sometimes we do see that it takes time for signals that we might be getting in the industry data. It just takes time for those to get in the pipeline of the housing costs that are actually measured in the CPI because of how slow turnover rates in housing and things like that, and also just the technicalities of the measurement of how that's put together. But in terms of just looking at the top line numbers, the core CPI up 0.1%, I do think it's worth noting that it was a fairly narrow miss. It was in things like airfares and, of course, some payback in the used car prices. But if you looked at things on the month like the trimmed mean CPI measures or the early indications of what the inflationary signals mean for the PCE inflation gauge, which is the Fed's preferred metric, things looked a little bit different on the margin. So when you start to strip out some of that noise, you saw that the softening in the inflation pressure that came in the August report was really narrow in scope.
Robert, let's go econometric. Aisle 5 at Whole Foods looks different than it looked a year ago as well. Our viewers, our listeners are looking at grocery store inflation through the roof. There's no other way to put it here. How do you respond to that when you talk about trim mean this or trim mean that?
Yeah, I mean, you see headline measures of inflation pushed up. That's certainly reflective of broad costs that U.S. consumers are facing. Of course, the old adage that we want to know what inflation is going to do next year or even the year after. And to do that, we have to get a sense of the underlying trend. And to get a sense of the underlying trend, we do look at the core measures. We do look at the trim mean measures. You think about the econometrics of that. There tend to be better predictors of what that trend looks like and what that trend will look like going forward. But of course, high food costs, high energy costs do take a bite out of the consumer wallet. So that is important to note, and it's certainly important to note near term, but we do have to parse out whether or not that has a signal about the inflationary trend going forward. So there's sort of two different issues there.
An important clinic on the economy and on the Federal Reserve next week. Rob, thank you, sir. Rob Rosner there, Morgan Stanley, senior U.S. economist. Couple of stories to stay on top of this morning, including that new partnership between the United States, the UK, and China. Here's a response from the state-affiliated Global Times out of China, Tom. An editorial. Here's a quote for you. If Australia acts with bravado to show its allegiance to the United States and takes the most prominent position in the U.S. anti-China strategy, especially by being militarily assertive, then Canberra will most likely become a target of Beijing's countermeasures to send a warning to others.
John,
that pushback's starting to ramp up, isn't it?
I'm going to go back to a single chapter by Stavridis on Rickover. There's an ancient fear of submarines. This would not be under discussion if it was boats or aircraft carriers or you name it, John. There's something about submarines that get nations all riled up.
Some tension we need to explore through the morning. Good morning to you all. Tom King, Lisa Bravitz, Jonathan Ferro, your equity market gun into retail sales and jobless claims. We're down 7 on the S&P. We're negative 0.16%. For our audience worldwide, on radio, on TV, this is Bloomberg Surveillance.
With the First Word News, I'm Ritika Gupta. It won't be all sightseeing for the first all-civilian crew of a manned space mission. Elon Musk's SpaceX launched the 4 into orbit from the Kennedy Space Center. They will conduct some medical research during their 3-day excursion. The passengers include tech billionaire Jared Isaacman. Reports say he may have paid $200 million for the flight, plus he'll donate another $100 million to charity. Australia is joining a new Indo-Pacific security partnership with the US and UK. The agreement was unveiled by the leaders of the 3 countries in a virtual meeting. The partnership has France upset because it allows Australia to acquire nuclear-powered submarines. And in 2016, Australia agreed to buy as many as a dozen subs from the French. President Biden and the U.S. military have defended calls that Joint Chiefs of Staff Chairman Mark Milley made to China in the waning months of the Trump administration. A new book says the general spoke with a top Chinese general twice, telling him the U.S. would not suddenly go to war. A Pentagon spokesman says that's part of Milley's job, and President Biden says he has a great confidence in Milley. Some Republicans say he should be fired. There's speculation about the future of Macau following China's decision to tighten its grip on the gambling hub. Beijing wants to appoint government representatives to supervise casino companies. It also wants to boost local shareholdings in the companies and require them to get approval before distributing dividends. Casino stocks are falling again after yesterday's big sell-off. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up, and it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early start to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We are putting as of this week, the vaccine or test mandate in place for every single employee. We can do that best when people are in person. It's time. It's time for everyone to be back where they can do the best work, which is definitely in the office. We are now consolidating our vaccination effort for public employees. Making sure that goes to full strength is absolutely crucial for this city.
New York City Mayor Bill de Blasio from New York City this morning. Good morning. Alongside Tom Keene and Lisa Rabbits, I'm Jonathan Ferro. Big morning for economic data, 8:30 Eastern. Retail sales and claims going into that. Futures down 6, negative 0.14% on the S&P 500. NASDAQ futures down 32. Softer, down lower by 0.2%. Yields going nowhere on 10-year bonds, 130.22. Euro dollar going somewhere, negative 0.5%, 117.62. You've got a weaker euro on your hands this morning, a much stronger dollar. And crude hanging in there, Tom, at 72.50 on WTI.
75.39 on Brent, and we had a 76 print there for a cup of coffee, John. So $4 from $80 a barrel gets my attention. We'll watch that here through the end of this short week, this fun week that we're having.
Are you having a good time, are you?
On Bloomberg surveillance. Seriously, up the Mississippi River, up the Ohio River, and this isn't the romance of pioneer America. This is the next part of this pandemic. Jennifer Nuzzo joins from Johns Hopkins Center for Health Security. I'm looking at the heat map in the New York Times, Jennifer, and I'm sorry, this thing is migrating north, up the Mississippi, up the Ohio. Is it going to migrate to the Northeast? This new agony of 1,900 deaths right now a day.
Yeah, I mean, I don't think anybody should get complacent. And certainly as we head indoors, because the weather is getting cooler, that raises the possibility that we could see a surge of cases in places that hadn't seen it in the previous weeks. That said, I'm much less worried about the Northeast compared to the Southeast, which has really been hammered by this virus, in part because of the higher vaccination coverage.
I'm confused over boosters. John's confused. Yeah. Lisa's confused. We're all confused. The only thing I know for certain, I used to dread going to the doctor to get whatever the booster was because it always hurt more. Is the booster going to hurt more?
I don't think so. My second shot didn't feel like anything. But if you're confused, you're not alone. I think a lot of America is, in part because we haven't had the scientific community come together and formally evaluate these. That's going to happen on Friday. with the FDA advisory committee. We'll see what they say. My guess is that, there's clearly a case for third shots for immunocompromised that's already happening. There might be some evidence for people over the age of 65, but I am not yet convinced that anybody else needs it at this time.
Dr. Nuzzo, I love that Tom asks the real questions of, is it going to hurt? Do I need a lollipop? And that's frankly the question that we're all going to be, exactly, I'll be answering from our kids. So when we talk about boosters, who do we listen to? Can we trust Pfizer that came out yesterday and made this big presentation on how important boosters are and how your immunity wanes after the initial 2 doses?
I think you can trust the FDA committee, and the advisory committee of immunization practices will meet next week. These are scientists who are beyond reproach. They'll be tearing into the actual data and looking at it and making their judgments, and whatever they recommend, I think, I think there's likely to be some consensus around that.
Meanwhile, overnight, we got some news that China has vaccinated more than 1 billion of its residents, of its citizens. How important is that, given some of the efficacy of that vaccination and what we know about that?
Yeah, I mean, it is important. Every vaccine in an arm is a serious illness averted. And although the vaccines being used in China has probably less protections than others, it's still fairly good at keeping people out of the hospital. And, that remains my top line goal for vaccines. That said, I think China and other countries are potentially going to be looking, for additional doses in the future. But my overarching priority is we need, as a globe, to make sure we get first and second doses into arms before we even think about the third doses.
Jennifer, a question off the remit. Peter Hotez is all fired up that we've succeeded in mRNA for rich, wealthy nations, but we need to figure out a COVID killer for poor nations, Africa, India, you name the rest, as well. From where you sit in your research, how close are we to a successful, non-fancy vaccine for the rest of the world?
Well, I reject that our mRNA vaccines are not appropriate for the rest of the world. They are potentially being used. I think some people worry about the cold temperatures. I think we're learning better about the stability of these vaccines at different temperatures. And also, Africa has proven its ability to maintain a cold chain. So we, first of all, need to start doing more with the vaccines we have to improve access. That said, I think there are other vaccine candidates on the horizon that will add to it. I mean, we just simply need more vaccines than we have right now. So I'll take them all. Absolutely.
I look, Jennifer, at where we are, and again, it's about the booster. When am I going to get a booster? Is a booster upon us?
Well, my guess, and this is just reading the tea leaves here, is that if the FDA committee endorses anything, it may be boosters over the age of 65, which clearly isn't you, Tom. But I think that might be the next that might be the next offering. And we'll see. I know the president is eager to push these, but really we need to let the scientists evaluate the data. And again, not distract from our top line mission, which is to get first and second vaccines into arms.
Jen, thank you. Got to leave it there. Dr. Jennifer Nuzzo there, Johns Hopkins Center for Health Security, senior scholar. Tom, you're right. I think most people are confused as to whether they need to go and get a booster or not, the way it's been talked about. Yeah. Should they go and get one or not? Do we have to wait till the weekend? Yeah. What is it?
Well, good morning, Ken Langone. And in support of New York University, I got a love note from NYU Langone.
What did they say?
They said that they remember me, and they'll email me the moment. They'll email me the moment that they get the booster in.
That was a personalized message, was it?
Yeah, it was from Ken. He said also pick up the 2x4s at Home Depot.
You get a lollipop after getting a jab?
No, I get a martini. It's on the rocks.
That's true.
It's not up.
Do you know how backwards the UK is? When I was a kid, you'd go to the dentist and get a lollipop afterwards. What's that about?
That actually goes so far. You can make so much with that.
That makes a lot of sense, doesn't it?
Yes, it does. Absolutely. I'm not going to go into that, but I will just say.
You can if you want, by all means, offend the country. Go for it.
I think I'm not going to, but I think what I'm going to say is when it comes to boosters, a lot of this also stems from the lack of clarity around how much you are protected against the Delta variant with the current vaccination regime. And frankly, that's the data that we're seeing. seeing is that people are more hesitant. I mean, all the canceled plans and the canceled conferences and the canceled hotel rooms. Did you see how much New York City is losing from just the hotel revenue because of business travel? $4 billion, that's the estimate. Just this year, it's estimated to be at north of $60 billion at the hotel industry.
Is that domestic business travel or international business travel?
Yes.
Where are we getting the bigger hit, both?
I haven't looked at the granularity.
You can say what you want. You always do.
I was at McDonald's on 3rd Avenue and I ran into John Tisch of Lowe's. And, I said to him, how's it going? And, he's a great hotel guy, great optimist and all that. The Tisch family is building a hotel in Dallas, Texas. The fact is they're building rooms in amongst all this.
Which part of the story is true? The first bit or the second?
No, but, I had a double cheeseburger, and I think John was going for the, chicken thing with the...
Is
any of it?
Okay. Futures down 6 on the S&P, negative 0.15%.
I offered him Tang, he didn't take it.
Retail sales, jobless claims, an hour and 35 minutes away from New York City, heard on radio, seen on TV. This is Bloomberg Surveillance.
Boosters work, and they would definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
At at the end of the day, it's quality of business that wins out.
We are seeing some of that wage pressure begin to filter through.
The Fed that has the pedal to the metal, and inflation is down the list of worries.
So long as China keeps slowing down, that's really going to cause problems for the Fed.
I wouldn't be shocked if we have a correction here. We're going to get one at some point.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Retail sales 90 minutes away from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures down 6 after yesterday's rally. We're down a little more than 0.1% on the S&P 500. TK, it's about claims. It's about retail sales.
It's about the economic data and, of course, all of this to the Fed meeting and what it means for the stock market. John, everybody, if you're getting out of your car on Bloomberg Radio, stay in your car. If you're in the living room and you're going into the kitchen to get a glass of Tang, don't, because Anahan is coming up with the most distinct, sharpest bull market note wrapped around that economic data, John.
Here's the number, Tom, 48.25 year-end on the S&P 500.
It's the way they get there. It's the way they get there. They have the acuity there that's really unique.
Lisa, one of the big bulls on the street right now going into year-end.
You know, this is the thing. This is the consensus, right? Everybody is sort of expecting maybe a little softness, but everyone wants to buy it. And even the people who have previously been a little bit more bearish are getting more bullish. Even the bears are buller bears than they were before. And I think that the reason why this week has been perhaps not flying by is because the narrative is not changing for people depending on the data. It's really just what your view is going forward.
Tom's having a great time, Lisa. He's enjoying the week. It's flying by for him.
It's not
flying by for me.
It could go on forever.
Jonathan Golub of Credit Suisse came out and said, why do we need to get a correction? This is what Golub said. Why do we need to get a correction? It's like going to the doctor because you haven't been ill for a while. The doctor turns around and says, yeah, you're due one. You're due one. You're going to get poorly soon. Why do we need a correction, Lisa?
Well, because people want it. I mean, honestly, I think that at this point, people think that perhaps we need to stall, we need to recognize the slowdown, and then we need to restart and see the data coming in stronger as everyone says that they expect it to happen. What people are saying is that right now, markets are not reflecting the weakness in some of the economic data. And whether some people are saying, well, that's because everyone's looking past it, and some people are saying that's because it's not reality, those are the two bifurcated views right now that are competing against each other.
The view from HSBC that we're just not pricing it in right now against the view from JP Morgan, just super divided still. Hard to find a consensus. If we can find one, we're due a correction, but I want to buy it. That seems to be the consensus view at the moment. Futures right now down 4 on the S&P. Let's whip through the price action going into retail sales and claims at 8:30 Eastern time. We're negative almost 0.1% after yesterday's decent move higher on the S&P with a nice cyclical bias. In the bond market, yields higher by a basis point to 130.73, and there is some dollar strength out there. Euro dollar negative 0.4%. Lisa, euro dollar 117.67.
Yeah, and this doesn't really seem to fly in the face of a bit of a sort of bullish tilt, although not anymore, because it does seem the S&P has tilted downwards. Today, 8:30 a.m., U.S. August retail sales. We're all focused on how much power there is behind the consumer, and this does come with initial jobless claims around the same time. The idea with jobless claims, don't pay attention to the noise. That's what some of the analysts are saying, simply because the hurricane does muddy the water, so to speak, and does lead to a higher unemployment rate. We might see a break in the downward trend that Tom has been talking about, the elegance of 9:40 a.m. Our own Jonathan Ferro, look for him on Bloomberg Television, interviewing Cisco Systems Chair and CEO Chuck Robbins.
Why don't we promote just let it go?
Hold on a second.
Just let it go.
The reason why I'm promoting this is because I'm actually interested in it, because I actually think that he's at the forefront.
A compliment.
Yeah, I mean, like, I'm being genuine.
I'm like the rest of what you do.
I'm not going to go there. That's not what I'm saying, and you know it. This is someone who's at the epicenter of a lot of the changes, people working from home and upgrading their software. I'm trying to move forward. 10 a.m., we've got July business inventories data. This feeds into this whole idea of supply chain disruptions and chip shortages. How much does this force businesses to stock up more than they otherwise would and race to get ahead of the holiday season? John, please save me.
Save you? Okay. Lisa, thank you. Thank you very much. Lisa Abramowitz there.
Just let her do the interview.
You're a day ahead. And she can do the interview if she wants. It's at 9:40 Eastern. Chuck's a good friend of the show. Lisa, drop by.
Yeah, he is.
Anna Han joins us now, Wells Fargo Securities equity strategist. Anna, your call is fascinating. 48.25 gets your attention on the S&P year-end. But then next year, 47.15. Let's talk about the bullishness into year-end and then the nuance through next year.
Well, I would say the bullishness for the next 3 months or so, what we're doing to get there is not just a one or single way approach. Now, you know I've been long cyclicals, that COVID beta and that reopening trade. But what I'm asking folks to do now for the rest of this year is take that multi-factor approach, add on a little bit of that low volatility defensive taste to that portfolio to keep and weather through that uncertainty with the timing of tapering. I think that combination is going to be a nice sweet spot for the rest of this year.
I'm not going to mince words. We protect the copyright of all of our guests religiously. Get her note through Wells Fargo. It is the single most concise bull market note I've seen this year. Anna, you've got an earnings juggernaut out to 238. You've got a path to 5,000 SPX out. You don't say it, but it's implied. And you do it with multiple compression. You're the first publication I've seen under 20. Can this market stay a bull market with a 19.8 PE? To me, that's massive multiple compression.
Well, we think that multiple compression comes in 2022. For this year, we still think multiples are going to probably land around, I'd say 21 or 22. And the reason why we have that compression for next year is because we think that the amount of growth we've had coming out of this recovery has been accelerated. You look at us coming out.
I want to cut you off there. This is so important. You're telling me the second derivative of earnings growth right now and profit wherever on the income statement is a positive function?
For this year, yes. And, I still think we're going to see that earnings growth next year. But it's the pace at which, like you said, that second derivative, it's a deceleration in the velocity here that we're talking about. And the reason for that is when you have such of that good news and that fervor just brought forward and tugged forward, you're going to see that impact, and we're taking from future profits. So that's why we think 2022, little less peachy story, but for the next 3 months or so, we still think it's going to be up.
Do you think that this is predicated on the idea that companies can continue to pass along nearly all the increase in the input costs to consumers?
Well, it's hard to say all, right? But I see your point there, Lisa. Yeah, so far, companies and corporates are saying that they are able to maintain margins, pass along those input prices, but that's a weak spot and a risk that we're looking at very carefully. So going into this earnings season coming up, I think that's going to be one of the spots that we look at and pay attention to one of the most.
All right, so what do you think is the potential risk factor? In addition to the margin pressures, the other one is from a debt ceiling debate that goes awry. Some people have been flagging that as the most likely disruptor of this rally. What's your view?
I agree there. Having this kind of macro overhang, there's a lot of uncertainty going on, not just in domestic policy, but international policy as well. You're seeing that kind of mix into the witch's brew and causing people's concern, causing additional market volatility. So it's going to be a bumpy ride up. But I think when you focus on the fundamentals, and that usually, it helps you focus when you get to earnings season to really look at corporate health. And you're going to see that corporates are strong. They still have a ton of cash. They are putting that money to work, and they are doing what they need to do to have that earnings growth that we expect, not just this year, but next year as well.
Anna, let's put a bow on it. Big up market into year end. That's the call at Wells. Slight down market through next year. That's the call at Wells. Can you help me understand what to own on the monster 3-month rally that you're looking for into year end?
I'm telling you, Tom, I think you hold on to that COVID beta. I think you hold on to that cyclical trade, but at the same time, keep something to weather the low yields and that stubbornly low yields we've been seeing. What's interesting is that you've seen real yields come up about 25 basis points over the last month or 6 weeks. I think that trend continues, but with that yield volatility, you want a little bit of, that defensive in there. So I would say that barbell multi-factor approach, stick with that.
People confuse us all the time. It's okay. Anna, thank you. Anna Hamner, Wells Fargo Securities Equity Strategist. It's okay, Anna. I understand. Tom, John, the Dow. No, I don't want to go there. It's too confusing. Futures down 10 on the S&P with negative 0.4 of 1%, 1/10 of 1% rather on the S&P. Down 0.4, Tom, on a euro.
You look at the bulls, Costin, Dwyer, Golub, what we see from Anaheim,
Kolanovich, JP, yeah.
All the rest of them. That is the most acute note stating SPX 5,000.
Big up market, Tom, into year end. They're still looking for a down market next year. 48.25 year end, 47 through next year.
Yeah, you know,
I'll
get there, but
it's interesting. There's some nuance there.
there's a ton of nuance, and there's what I see is the earnings call at 238 is just extraordinary. I mean, it's a chisel.
But you nailed it for next year, Tom. The multiple contraction that they're starting to look for.
19.8. Yeah.
That gets
John Golub, I
complicated.
think, said at 20.
Fed policy, front and center there, Lisa.
Yeah.
Fed policy, but I also think that margin compression is going to be one of the key issues to watch. And frankly, it's the dividing feature between bulls and bears. How much can they increase profits to offset the degradation of margins that people are predicting pretty broadly?
We go.
No, and look, you can say it's gloomy. I can say that it's realistic given the fact that the input prices have been increasing faster than the consumer prices.
That's what the bears always say, Lisa, that the gloom is just realistic.
Okay, hold on a second. It's one thing to be a bear and say, sell everything, go to triple leverage cash.
Thank you.
It's another thing to say, here are the nodes of caution to be looking for.
What about the upside risk? Go through the nodes of upside risk for us.
The nodes of upside risk is, hold on a second, the nodes of upside risk is if Washington, D.C. passes a stimulus plan that actually is stimulus, that doesn't have as high taxes, that ends up without a sort of debt ceiling debacle, and you have companies that actually aren't able to, or they're able to pass along margin costs.
There we go. Well, it's nice just to get a fuller picture.
It was to get a fuller picture.
Of the range of risk.
Do you feel better?
It's nice to get some balance on the outlook.
The pendulum of nodes.
There's a wide range of outcomes we could experience. And
did I spell it right?
Pendulum of nodes.
Down 4 on the S&P.
Nodes.
Negative 1/10%.
I want a 3-week vacation. They say nodes.
Happy Friday to you. Heard on radio. Seen on TV. It's Thursday, really. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. This may be the start of a new era in human spaceflight. Elon Musk's SpaceX has launched 4 civilians on a 3-day orbital excursion. The passengers in the Dragon crew capsule include tech billionaire Jared Isaacman and a childhood cancer survivor. It's been reported that Isaacman is paying SpaceX $200 million for the flight. He's also donating $100 million to charity. Turns out those latest cruise missiles tested by North Korea this week were fired from a train. That's according to the country's official news agency. It suggests that Kim Jong-un has a new option for a quick strike against U.S. allies in the region, such as South Korea and Japan. President Biden's economic agenda risks getting delayed by weeks of months in Congress. Tax, healthcare, and other issues are still unresolved. Plus, there's continued squabbling between the Democratic Party's progressive and moderate wings. House committee did wrap up work yesterday on some portions of the package, including $2.1 trillion in tax increases. The push for a $15 an hour federal minimum wage may have stalled in Congress, but the tight U.S. labor market is making $15 the de facto minimum these days. An analysis of jobs posted from spring 2019 to spring 2021 show that many service sector industries crossed above $15 starting wage threshold, and big employers such as Target and Walmart have bumped their starting pay to $15 or more. The risk of battery fire has General Motors playing it safe. GM has told some owners of the Chevy Volt electric car to park and store the vehicles at least 50 feet away from other cars. That's to reduce the risk of a spontaneous fire. GM has recalled all of the 142,000 Bolts sold since 2016 to fix the problem. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧 可以恢復翻回港易嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Merkel, after 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
What this does is allows the three countries that share very close perspectives on human rights and the rule of law and on free trade and international shipping to come together and above all to uphold our belief in democracy. And we don't wish to be adversarial towards any other global power.
There is a new partnership between the UK, the United States and Australia to share nuclear technology. It's an important story we'll stay on top of through the morning right here on Bloomberg TV and radio. Alongside Tom Keene and Lisa Brammitz, I'm Jonathan Ferro. Your equity market looks like this. We're down 3 on the S&P, negative 0.1%. Jobless claims and retail sales 1 hour and 12 minutes away. TK going into that yield higher by a basis point, 130.90 on 10s. And your euro is negative, your dollar is stronger. Euro dollar 117.70, down 0.4%.
We haven't talked enough about yield today, John, to bracket it from the 112 up to whatever.
Thank you, Tom.
And the idea here, we've come into 130, and, you know, we've been gyrating, but I'm fascinated. If we get a transitory kind of set of data today, what do we do?
We've been
126?
in and around 130 since Chairman Powell spoke at that virtual Jackson Hole symposium.
Virtual.
It was virtual,
I
wasn't
froze out on the deck. It was ice.
31 on 10s right now. I don't think we've got the game changer until we get a better view into 22 and what policy looks like there and beyond.
Okay, I'll go with it, you know.
that they kept saying in the Indo-Pacific, it was clearly the elephant in the room. Who is this clearly going to be pointed at? And that is Beijing. But they, of course, would not say that this was because of China head on. It's going to be a bit complicated in the fact that now you see what's happening. The French are clearly very upset about this. Even the foreign minister saying this is a stab in the back because Australia was supposed to have and did have this contract for submarines with France, and they are ditching that to now join this new group with the United Kingdom and the United States.
What is the backstory here for you? Like, if you were going to research the story for today or tomorrow, I know you're distracted by a lot of serious stuff like higher taxes, et cetera, but what's the Anne-Marie Horton research item on this State Department issue?
I think the research item is, one is really Australia. Does this mean for them that they are really going to be, for them it's very complicated, I guess is where I would start. And I would want to know why they wanted to do this now with the United States when they already had a contract with the French, because doing this with the United States is clearly going to erupt a more emotional feeling from Beijing. Australia already is having issues, Prime Minister Scott Morrison, with commodity trading with China. This is their biggest partner, and they cannot completely ostracize Beijing if they want to continue down a prosperous economic
Anne-Marie,
road.
let's go there. It's so important. The fella down under, so to speak, has got a big problem. It's not just foreign policy, it's economics. Anne-Marie, where's the cover come from for that?
It's a great question. It's the fella down under, or as the president said, his pal, or Mr. Prime Minister. At one point, we think he potentially forgot the Prime Minister's name, Scott Morrison. It's a great question on the economic coverage. Does this mean the United States is the UK is going to help Australia maybe a little bit more with trade? Because this clearly does set up a more adversarial relationship between Beijing and Canberra. It's going to be very interesting to see what happens on that front. But clearly, Australia is excited about this. They are in the good graces, you can say, of the United States. They will be meeting as well with the president next week. There'll be a quad meeting. This is kind of like a mini quad, I guess, of the group. And the Prime Minister is now going to have a little bit more of a strategic and closer partnership with the United States. That's the cover. Militarily, that is the cover.
I mentioned this a little bit earlier this morning, Lisa, that editorial in the Global Times, the Chinese state-affiliated media. If Australia acts with bravado to show its allegiance to the US and makes the most prominent position in the US anti-China strategy, especially by being militarily assertive, then Canberra will most likely become a target of Beijing's countermeasures to send a warning to others.
Yeah.
That's the pushback this morning.
That basically Australia will become a pawn in the U.S.-China spat, which is a big concern, arguably for Australia, that is concerned, as you were saying, John, about these economic issues. I'm wondering, Anne-Marie, about the timing, and this is something we've been talking a lot about this morning. It comes with the backdrop of a very big domestic agenda that's facing increasing roadblocks. How much is President Biden trying to use and, frankly, ramp up some of the disagreements between the U.S. and China, which are highly popular, in order to gain popularity to push through some of this agenda that's stalling out?
I don't see this announcement as having to do directly with domestic policy, but it's a good point, Lisa, in the sense that they can use this as a way to push forward his Build Back Better agenda. He's going to be giving a speech about that later this afternoon in the 1 o'clock hour. And we've seen this time again, and not just from the president, but other elected officials, about why there needs to be better infrastructure, better spending on cybersecurity, better spending on energy, because they want to maintain competitiveness with China. But one thing that Chinese will take umbrage, of course, with this agreement is not just about competitiveness, but containment. This nuclear submarine agreement is about containment of China in the military, in the South China Sea, in trade shipping lanes. So this certainly has a little bit more of a foreign policy tilt, but they will use it to drive home their domestic agenda.
Anne-Marie, thank you. Our Washington correspondent down in D.C. Anne-Marie, thank you very much. Latest news coming out of Punchbowl, Tom, on the debt ceiling debate that Yellen, Secretary Yellen, almost called a chair Yellen. How many times have you done that?
Many.
I'm still doing.
Secretary Yellen.
I called the Prime Minister of Australia this morning, Jim Morrison. So
that fella down under. Still used to calling Mitch McConnell Senate Majority Leader, but Senate Minority Leader Mitch McConnell had a phone conversation with Secretary Yellen, Tom, on the debt ceiling.
You know,
how seriously we're going to take that? As a market participant right now, we're just conditioned by experience. it gets dealt with.
Exactly. I mean, I've grown up with hysterics in my household over the debt ceiling. You know what? It always gets fixed. I'm like, yeah, okay. Chair Yellen would say to me, no, Tom, that's not right.
Keep looking through it? Is that your view then? Keep looking through
My
it?
answer, my experience is, yeah, okay, it's there. It'll get fixed.
And Lisa, most people in the bond market agree.
Most people in the bond market agree. However, there are disruptions that are actually real, like the amount of debt and sort of the offset from QE because they aren't selling as much because the debt ceiling hasn't been lifted. There are technical reasons why it could be disrupted.
The wonderful Chair Yellen would say, Tom, you're wrong.
That fella with the bow tie is wrong.
Mm-hmm.
That's what she would say.
Tom Farrow, it works.
Tom Farrow. Futures down a tenth. That's everyone's nightmare, Tom. From New York City.
Abramowitz.
This is Bloomberg. That's better.
China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Retail sales and jobless claims 1 hour away. Here's the price action going into that on radio, on TV. This is Bloomberg Surveillance. Equity futures down 1/10% on the S&P. The Nasdaq down 0.2. Where's your Dow, TK?
Dow's down 10, but the VIX
Brutal.
18.67 is actually, John, important.
This partnership's something else, isn't it? Real value add. Doug Cass writing in, really revved up this morning. Doug making the point, Tom, how can you have a precise forecast for year end into next year when the range of outcome is so wide?
Okay, well, that's traditional. What he's really revved up, John, what he's really revved up about is Mr. September, Brett Gardner's doing it again for the Yankees. Can we continue?
We can. You want to do baseball?
Yeah, Brett Gardner's doing it once again. That's why Brett Gardner's Brett Gardner.
We're done. Your bond market looks like this: 2s, 10s, and 30s on treasuries.
It's a great data check.
Isn't it beautiful? You should bottle this one, Tom. Yields up a basis point on 10s, 131.24. You drink it. 30s, 187.53.
Well, the Prosecco adds value.
Curve a little bit steeper.
I'm trying.
Steve Ignander of Standard Chart, he reckons that we're underestimating rate hikes going forward from here. His bias to play this through the bond market, switch up the board and I'll show you, 5s, 30s. See, the call itself is interesting, but then you've got to make the market call off the back of it. So he wants to play the flattener here, 5s, 30s. So you'd play the rate hikes into the belly of the curve, yields higher, and then the curve flattens 5 out to 30s. Right now, Tom, 106.70. That over the last year, just in 10, 11 basis points, but a lot of chop in between.
Yeah, the belly of the curve here is not in 10 or 11 basis points.
Is it not?
Assure you.
Is it out 10, 20, 50, 100 through the pandemic? Curve's wider. I think we need to move on. That right there is the cross-asset price action. In about an hour's time, we get claims and retail sales. Let's get you some movers.
Did I sign up for this?
Hello, Romain.
Hello, John. Hello, Tom. As well as to you, Lisa. Take a look at some of the biggest movers out there. Cisco, that's actually your biggest volume mover on the day, at least as far as the large cap companies go. The company providing a long-term update here, 5 to 7% growth here over the next 4 fiscal years. And more importantly, the company actually is saying that subscription side of its business that Chuck Robbins has really been trying to build out, that will reach about 50% of revenue by 2025. That's significant here for a company. Of course, it had been a laggard quite some time here, primarily because of that legacy switch business.
And Romain, this is critical. Lisa interviewing the leader of Cisco here late in the 9 o'clock hour.
Okay. Well, there you go.
I just don't think Chuck Robbins knows that yet.
He does not know that. All right, I'll submit
Neither
my
does
question.
Lisa Abramowitz, but carry on, Romain.
All right, well, we'll keep an eye on that interview there. Keep an eye on Las Vegas Sands and the rest of the casino stocks exposed to Macau. Down here for a third straight day. We should point out they're down now. If today turns out to be a down day, this is going to be the 6th day in 7 that they're down. A lot of them are well into correction territory here. Melco, not on the board here, is down about 29% over this stretch. Las Vegas Sands, which is down 2% pre-market, down about 15% over that stretch. And Beyond Meat getting a downgrade today. Some concern all the way down to underweight. Some concerns here about the competitive pressures. Flip up the board here. There was an interesting note out here on the automotive space, particularly with EVs out of Bank of America. They actually downgraded Lordstown as well as Fisker here. The concern here is really the competitive pressures. The analysts didn't seem to think that these companies would not be able to bring their products to market, but by the time they get it there, there's going to be so many other options for investors out there. Both of those stocks down by about 2% each. And then an upgrade to Avis Budget here on the possibility for that company to, quote, over-earn those shares higher here in the pre-market by about 2%.
Romain Bostic, thank you so much. Let's get right to it, folks. Lots going on here. I really want to point out an hour from now key economic data. Vasilios Giannakis knows the depth of the foreign exchange market at Bank Lombard Odier, had a foreign exchange strategy. Thrilled he could join us here this morning. Let me get the basics down. Vasilios, calls all over the place. Strong or weak dollar 12 months out?
Well, Tom, this is indeed a very, very tough call. My inclination would be to say weaker dollar. I think in the short term, in the near term, there is low visibility. We have the markets getting a bit spooked up about how deep or how prolonged that growth scare is going to be. Is it going to move to something a bit more sinister, a bit more severe? But I think if my central scenario, our central scenario here is that the activity data are going to start stabilizing, and potentially we're going to see some pickup in activity, especially in places that have lagged the upswing, which is Europe in particular, then that should eventually move into a somewhat bearish environment for the dollar. But again, the near term, I think it's going to be very, very narrow ranges.
If there's ambiguity there, where is the cross-rate opportunity? I mean, if I'm hearing this from so many, if I really don't know on U.S. dollar, then where is the opportunity to see a couple of big figure move?
Well, I think right now, I think one needs to separate whether they want to be tactical, whether they want to play the short term, and basically, eventually you want to play the ranges, and in particular in euro dollar, you would like to buy at 117, you would like to sell at towards 119. But I think if you'd like, and if you have the stomach for a more medium to longer term view, I think you would like to be positioned somewhat bearish against the dollar, which means in G10 space, you would like to hold some euros. You definitely want to hold some Aussie for the medium to the long term, because I think monetary policy expectations are extremely benign. If you look at 3 years out, we're looking for what, 45 basis points of hikes, which is virtually nothing. In EM space, I think you need to be positioned for upside in the renminbi.
All right, so this is actually important because this has actually been the pain trade to try to short the dollar. And frankly, it's been a pain trade again and again after the consensus heading into this year was bearish on the greenback. If the Fed policy does tighten, albeit not very much, or even signals as much, or even starts to taper and starts the speculation, why will that not strengthen the dollar against a backdrop of an ECB that can't get dovish enough, even if there is a little bit of taper talk on the margins that Christine Lagarde has to bat down occasionally?
Right. So, Lisa, you've thrown two things there, the Fed and the ECB, which are, extremely important for the FX market. Let me first say, as far as tapering is concerned, I think it's in the price. It's well telegraphed by now, and it's not going to have a major impact on the FX or in asset markets more generally. Whether it's going to be 1 month earlier or later, I don't think it's going to really matter. As far as the Fed hiking is concerned, we have already about 3 25 basis points hikes priced in by the end of 2023. And we've also seen the first baby, let me call it baby hawkish steps by the ECB, which were announced last week. Now, let me say one thing. I find it extraordinary, the fact that the market is so benign about the 3-year ahead horizon for the ECB policy. There's virtually nothing priced in. So even the slightest probability of the ECB moving, which it means to me that this is quite a complacent approach. But above all, I think what we're missing here is the global picture. It's not just the Fed that dictates what the dollar is doing. The dollar is moving along with a global cycle. You have had periods in the past where the Fed was hiking rates, yet the dollar was depreciating. 2017 is a case in point. So I think that the main question here is not really whether the Fed is going to hike or not, because eventually they will, but whether growth is going to stabilize and it's going to start picking up. Now, of course, if the Fed goes all out crazy because inflation turns out to be much more persistent, this is going to be an entirely different story. But I think in a scenario where the Fed is hiking alongside a robust global growth and a robust global trade picture, I think empirical evidence will tell you that the dollar should appreciate.
All right. There was one thing that you said in here, that there's too much complacency that the ECB will not tighten at some point in the next 3 years. Is there, or do you really think that perhaps there is a serious chance the ECB will never be able to raise rates, given how low inflation is expected to be?
Well, never say never, first of all. I think, look, the way I see it is that I see it in terms of probabilities, and I see it in terms of risk scenarios. I'm not saying that the ECB will raise rates over the next 3 years. What I find a bit complacent is the fact that the market is currently pricing a 0 chance of that happening. And that is the bit that I'm actually finding a bit complacent. And we know right now, that growth is rotating towards Europe. And you can see that in the relative PMIs between Europe and the US. And you also have the next generation EU funds that are going to be put into work, and potentially they're going to start helping growth even further, therefore narrowing the output gap and putting some pressure on inflation. But again, my point is about the probabilities. I find it weird that we have 0 chance by the market priced in that the ECB in the next 3 years will do nothing at all.
Such an important point there, Vasilios, and good to catch up. Good to hear from you again. Vasilios Giannakis there of Bank Lombard Odier, the head of FX strategy. There is a difference between having a base case, maintaining the base case, Lisa, and then adjusting the balance of risk, the probability around that base case. And clearly there's some asymmetric risk there in the mind of Vasilios.
I find it fascinating that there is a 0% risk praised into the market that the ECB is going to raise rates in the next 3 years. That alone speaks volumes. And he's right. I mean, that to me is something that's interesting.
A total capitulation condition, Tom, by what's happened in Europe over the last 10 years and arguably what's happened elsewhere in Japan as well.
Well, the European dynamic, yeah, the Japanification of it and all that. But again, we go back to a major horse in foreign exchange saying, I really don't have a belief on dollar. I find that telling.
Hey, Tom, doesn't that play into the Doug Cass call? Just the range of outcomes going into next year is just so wide still.
You know, you mentioned Cass is out of control this morning out on
What's
Twitter.
up with Doug this morning?
A great trader. He's spouting random walk theory, and so I did some research on this, and the Yankees have the worst walks per game in Major League Baseball.
Do they really?
Yeah, they can't get the ball over the plate.
Is that actually true? Just to clarify. You've not made that stat up.
Why would I'm
Why would you? I mean, you've got a bit of history there, Tom.
I'm always trouble.
Equities down 8 on the S&P, negative 0.2%. Retail sales and jobless claims just around the corner in New York City. We'll break that down for you at 8:30 Eastern time. We are 49 minutes away. Yields are higher by a basis point to 131.41. Talked a lot about the euro this morning. The euro's weaker. The dollar's stronger. What this week, Tom?
Yeah,
Euro dollar 117.73. We're negative there, 0.4%. This show's flying by.
It is.
Yeah, right. Heard on radio, seen on TV. This is Bloomberg.
With the First World News, I'm Ritika Gupta. It won't be all sightseeing for the first all-civilian crew of a manned space mission. Elon Musk's SpaceX launched the 4 into orbit from the Kennedy Space Center. They will conduct some medical research during their 3-day excursion. The passengers include tech billionaire Jared Isaacman. Reports say he may have paid $200 million for the flight, plus he'll donate another $100 million to charity. Australia is joining a new Indo-Pacific security partnership with the US and UK. The agreement was unveiled by the leaders of the 3 countries in a virtual meeting. The partnership has France upset because it allows Australia to acquire nuclear-powered submarines. And in 2016, Australia had agreed to buy as many as a dozen subs from the French. President Biden and the US military have defended calls that Joint Chiefs of Staff Chairman Mark Milley made to China in the waning months of the Trump administration. A new book says the general spoke with a top Chinese general twice, telling him the US would not suddenly go to war. A Pentagon spokesman says that's part of Milley's job, and President Biden says he has great confidence in Milley. Some Republicans say he should be fired. Tencent Holdings has now lost its place amongst the world's 10 largest companies by market cap. Hong Kong shares of the gaming and social media company fell today. Now there's no Chinese company on the top 10 list for the first time since 2017. Beijing's regulatory crackdown has been wreaking havoc on the market. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I want to ask about your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience, because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Reliability matters and affordability matters. And so if costs go up, consumers don't like that. And if reliability goes down, it creates real problems. And so it's one of the reasons that we have to be very thoughtful about changing the mix. And I think what we're seeing in Europe right now is wind and solar are great, but if the sun's not shining or the wind's not blowing, you need to have, people still need electricity.
Oh, we're certainly seeing that in the UK right now, Tom Keane.
Did they get wind in the North Sea? Seriously.
The wind's not blowing, that's the problem.
Yeah.
It's not blowing the way they want it to. The Chevron CEO there, Mike Wirth from New York City this morning. Good morning. Alongside Tom Keane, Lisa Bramford, I'm Jonathan Ferro, marching towards retail sales and jobless claims in about 42 minutes. Equity futures, Tom, down 8. We're negative 0.2% on the S&P.
Brilliant interview earlier with Anna Hahn of Wells Fargo, a fact-based interview on her bullish call on it. It's founded on earnings. David Wilson drives forward the conversation that earnings matter.
Yeah, they absolutely do. And it's interesting, if you're looking at a comparison between earnings and stock prices,
please,
in the case of the S&P 500.
I'm all cash. I'm looking. Go.
Well, I mean, it really depends on your time frame, what that relationship looks like. You know, the other day I was talking about how Keith Lerner at Truist was pointing out that, you know, earnings have actually grown faster than the S&P 500 this year. If you pull back, though, and look at a little more than a decade, going back to 2010, around the time you had a low in earnings, it's a whole different story. That, you know, really over the course of the past year and a half, the bull market we've had in U.S. stocks, the S&P 500 has really pulled ahead of the growth in earnings. I mean, that's the key point.
That's a multiple expansion.
Yeah, well, you could say it that way. You know, that's one way to look at it. But, you know, beyond that, I mean, you look at the top performing groups like technology, you know, and you go back over the last 10 years, you see a far bigger increase in share prices than you do in earnings. Same thing in that consumer discretionary category, retailers, automakers, home builders, you name it, healthcare. more or less in line by comparison. And then you look at stocks where they are. I mean, you're still not talking about relatively high PE ratios compared with smaller companies, though definitely high relative to the rest of the world.
Standard & Poor's 500, 22 times earnings. For those of you on radio, Anna Hahn saying we're going to compress that down over the next 18 months to 19.8 with some earnings, multiple compression rather. David Wilson, thank you so much. Right now, we go not to Cape Canaveral, but across A1A over to Port Canaveral, which is where the bars were back in the Apollo, Gemini, and Mercury programs. So my father would tell me. Ed Ludlow reports after a celebration last night. What happens today and tomorrow, Ed Ludlow, with the astronauts in space?
Yeah, so they're at a cruising orbit or an orbital apogee of 360 miles, which is a record for SpaceX. They've never sent their Dragon capsule that high. And they're orbiting, they are in real space. They are in a vacuum inside that capsule. And, let's just be frank about it. They will conduct some minor scientific experiments, but really they're along for the ride. They're there for the experience and to kind of be the poster children of future civilian, I don't want to use the tourist, but future civilian space experience. And they'll do that for 3 days, and weather permitting, they'll splash down sometime between Saturday afternoon and Sunday afternoon off the coast of Florida.
Ed, how much of a template really is this for the consumer ventures into space, considering the fact that the members of the crew paid, I believe, something like $200,000 a pop. Each of it was going to be donated to children's cancer and treating people. I mean, this is very much a statement more than some sort of recreational view into space alone. So what is the template that we're seeing created here?
Yeah, there's two elements to this. SpaceX says this is a supply-constrained business, right? They have a big backlog, they say, of willing, paying customers that want to do it. They say they may do 4 to 6 missions next year. Let's see how that goes. It doesn't seem to be a priority within the scheme of things. SpaceX is doing a lot. But every NASA official I spoke to, every aerospace engineer, every space investor, we had so many on the show last night, say this is a much bigger, more substantive step forward than anything we saw from Bezos or Branson. What Bezos did, there was so much fanfare. You guys remember going 65 miles above the Earth for just a few minutes. This is a completely different ballgame, and what they're doing is actually much higher risk, much more technically difficult to pull off. And so far, the mission is a complete success.
All right, Ed, just to correct myself, I said 200,000. This whole mission is raising $200 million in charity for childhood cancer research. And Jared Isaacson, one of the crew members, is personally donating $100 million to St. Jude Children's Research Hospital. So what exactly is the price tag for a trip into space based on what we've seen?
Yeah, simply put, we don't know. Jared Isaacman was the benefactor of the mission. He paid for all of the crew members to around the tune of $200 million, as you say. For SpaceX, the cost of launch is a bit unknown. I'll give you an example. When SpaceX takes a professional NASA astronaut to the International Space Station, that is at a cost of $55 million per seat. Right. They normally carry 4. You take that multiple, $200 million seems to be the going rate.
Ed, I thought your coverage this morning was outstanding. I just got to tell you, don't do kilometers, do miles. They're 360 miles. I did kilometers. I almost fell off my chair. Ed, if Sir Richard or Sir Jeff congratulated Sir Elon?
Not yet. And then this is the thing. This is the big criticism around all of this, right? This is why this mission is seen as important. There was so much fanfare, as I said, around Bezos and Branson. And actually, the crew of this mission acknowledged that they don't want to be seen as the latest billionaire going into space. They actually wanted to do a mission that was deliberately challenging, deliberately difficult, deliberately risk-taking, deliberately beyond what anyone had done, so that it was a benefit. I actually was told by NASA that SpaceX has agreed to hand over all of the data from this mission free of charge, everything that's recorded out there, radiation levels, space debris, the impacts on human physiology and biology. And when and if they get back down to Earth, they will even hand over the capsule so that NASA can inspect it.
Ed, quickly, I got 10 seconds. Did they take Tang into orbit?
They took a ukulele.
There we go. Ed, thank you.
Can we send Tom next time? That's what we're all wondering, right?
With a tang and ukulele. Let's see what happens.
Scientific experiments up there.
That would be a
Ed,
new
thank you
kind.
very much. Great work as always. Ed Ludlow at Cape Canaveral. Tom Keene, we said it earlier, let's say it again, and congratulations for SpaceX and Elon Musk.
This is so important. I look at, and Ed, the coverage that Ed and we had in Texas was phenomenal. But come on, this is the real deal. And this goes back to John Glenn. It goes back to Mercury and the challenges along the way, including a fair number of risks, deaths, and injuries.
And arguably, Tom, just the beginning of all of this as well.
I don't know where it's going. What I will say, John, we underestimate how improved the technology and engineering is versus what we see at the Smithsonian Air and Space Museum.
Yeah.
This is factors.
That's the broader story, but the personal story, Tom, I think we underestimate Elon Musk. I know a lot of people like to joke about Elon, becomes a caricature often of himself.
Yeah.
Pretty phenomenal achievement, Lisa.
And I also think the idea of daring to dream, I mean, really the idea of what will power the next technological future is exciting.
Equity futures this morning. Good morning. We're down 0.2%. In the next hour, retail sales and jobless claims in America front and center. In the bond market, yields up by a basis point at 131.24. For our audience worldwide, heard on radio, seen on TV, with Tom Keene, Lisa Brabitz and Jonathan Ferro. This is Bloomberg.
There is just a lot of demand right now for products, whether those be items for our home office or for backyard entertainment. This has been a consistent issue for the past year or so throughout various lockdowns. The global supply chain is made up of ships and trains and trucks, and it's designed for predictable patterns of demand, which is the exact opposite of what we have right now. A lot of uncertainty about whether certain economies are going to be open or closed based on the outbreaks that they're having. So we're just seeing a lot of confusion, a lot of chaos, and a lot of uncertainty disrupt the whole system. The auto industry is very reliant on semiconductors, these memory chips that are in basically everything we buy that has sort of an electronic component to it. And they come from certain economies in Asia like Taiwan, where they're having trouble meeting the demand. The supply chain issues are going to be around as long as you think the virus is going to be around. First or second quarter of 2022 is when a lot of people see the normalizing of all the shipping and transportation disruptions that we're seeing. But if they don't, we might be dealing with this for another year or two or three.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Really look at corporate health, and you're going to see that corporates are strong. They still have a ton of cash.
The stock market is going to end the year higher than it is today.
The Delta variant has put us in a position that I think we're going to set up a second reopening.
The Fed will have to contend with, at least tell the markets, that the inflation pressures we see today are supply side and shortage oriented.
They want to see that substantial further progress towards their goals to raise rates. They want to see that they've achieved maximum employment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Tom Ferro, Lisa Abramowitz, and John Keene. We welcome all of you to Bloomberg Surveillance. An important hour with economic data, an important hour where caution pushes against the many bull market calls we've seen. John, this is a big hour.
Is this real? Is it a nightmare? We're 30 minutes away from jobless claims and retail sales in the United States of America. It's the final stop, Tom, on the way to September 22nd at the Fed meeting next week.
Yeah, it is. The Fed meeting, I think, is really what we drive forward to. We see it with some weaker futures. We'll get to the data in a moment. Well, John, what's so important here is that we dovetail the American consumer into a really good claims trend.
And dovetail the optimism of Wells Fargo, 48.25 year-end on the S&P 500, with a caution from our next guest in just a moment, Tom, warning about the level of complacency among investors. That's the divide. That's the debate at the moment.
Let me go to Lisa on that, because I think, Lisa, you've been really out front on this. The boom that we see, the boom in real estate, the boom in the equity markets. You take it right over to the Fed and all that money in the system.
All that money in the system. And just to pinpoint that in the retail sales, the idea here of, and get this, what if it surprises to the upside? What if we get a very strong retail sales print?
I'm in shock.
Exactly.
Repeat.
I know that you'd be in shock, but what if we see real power and people deploying what's in their savings account to keep buying stuff, because that's the American way? What does the Fed do with that?
Oh, they'd hike and the market would crash.
This is like but you've hit a nodal point here, Lisa. You've hit a nodal point. To the two of you, Lisa brings up. Let me go to you, John, just to keep it simple here. This is about the shift from goods consumption to services consumption. That's the mystery that's out there right now.
And that full service sector recovery has been pushed back, Tom.
Yes.
Started with Goldman earlier on in the summer, and most people are pushing it back. September has quickly become, I don't know, 2022 somewhere.
Right. Yeah, I guess so. I'm going to be rude to Lisa and get to the data check here, because we got to get to a more cautious guest here in a moment. John, I'm looking at a VIX 19.04. I'm sorry, it's stasis.
Equities down 11 on the S&P. We're negative 0.25%. We go into jobless claims and retail sales in 27 minutes' time, with yields higher by a basis point, 131.07, Tom, on 10s.
Yeah, well, we're going to do that right now. Lisa, I want you to bring in Michael here, because there's a caution here. There's a push here, which I think you're really comfortable with. Lisa, why don't you bring in the gentleman?
Two bears in discussion.
Hold on a second. I want to start right there, Michael O'Rourke, Jones Trading Chief Market Strategist. Is that what you call yourself, a bear? Is that how you would characterize your view?
These days, absolutely. And I'm just concerned about this environment. It's I've been in this business for almost 30 years now, and I've, as a prop trader during the 99-2000 bubble, I haven't seen this level of complacency in my career, and it's accompanied by valuations that obviously, that I would say they eclipsed the 99-2000 levels. So depending on the valuation metrics you're looking at, I mean, we're arguably the most expensive market in well over 100 years.
So, Michael, if someone named John Ferro would say to you, people have been making this argument for a long time, and frankly, people have been overly pessimistic, and what if we surprise to the upside? What do you say as your counter argument of what could be a catalyst to change the backdrop now?
I put it this way: if you've been bearish, and I had my share of bearish calls in the past decade, and it's been rough. but it's also been in the past 13 years driven by, monetary stimulus. And now, of course, this latest wave is fiscal stimulus on top of it. I think for me, the issue is I don't see how these valuations get justified without either a long basing process or a significant correction. We have the economic data there. We have an economy that's been roaring for the past basically 18 months. So that's there, but it's just the valuations have been pushed well beyond levels that are historically appropriate. I mean, the market cap to GDP for the S&P 500 is 170%. We peaked at 120% in 2000. And for the past, I'd say 30 years, it's averaged 85%. So that to me is a little alarming. The difference now, I would say, versus most of the past year is that we're seeing the monetary and fiscal stimulus they're going to start to wane. That's going to be the 2022 story, that we're going to face both a monetary and a fiscal cliff, or what I'm calling dual cliffs, that are going to be a concern for investors.
Just allow me to be clear. I'm not making a market call here. I just think we spend a lot of time saying what goes wrong, what will go wrong. Let's talk about what might go right sometimes as well, Mike. That's been the big issue for me over the last 10 years. We talk a lot about downside risk and not upside risk. Right now, the consensus, if we can find one together, Mike, arguably is they agree. They think we should have a correction, but they all want to buy it. Now, Mike, I want to understand from your perspective the difference between a dip to avoid and a dip to buy. Because when that moment happens, when you get that gap lower in an equity market, if it's 5, if it's 10%, the people that said they want to buy it, they run pretty quickly as well. What's the difference between a dip you buy and a dip you avoid?
I think there's a couple of factors. One is obviously the level you get to in the valuation, and the other is the earnings and the growth prospects out there for the economy. And that's my concern here, is that I don't think either one looks really good in this environment. We've had more than $10 trillion of monetary and fiscal stimulus thrown at this economy for the past 18 months. I mean, the one thing I would argue here is that you look at March of 2020, and there was this incredible amount of uncertainty and fear. I would say today there's an equal amount of uncertainty when it comes to the economy, because you don't know what the natural trend of business or economic growth is. Tracy Alloway from Bloomberg had a great story yesterday about how this semiconductor shortage is equivalent to capital markets businesses on Wall Street allocating, in this case, bonds, but it's the same thing in the IPO market, where people over-order in order to get an allocation. And that's where the risks start to pop up when you have all these dislocations in the economy. Right. So my point is, people ignore the risks because the prices are higher and everything feels good. Back in March of 2020, obviously everyone just saw the fear.
Michael, the catharsis when things go down, there's a difference when things go up. Do you have a buy limit order or a place where if the market advances like the bulls say, you have to step in and participate?
Yes and no, I guess is the best way. I think there are, if you want to be invested, there's places you can be. I've been on here before. I said I like the financial industry. I like the banks. I think they are the most attractive area of this market. They're still generating tons of cash, tons of significant earnings despite a zero interest rate environment. So I would, I think the value space is ready to rally again. Obviously, it started to rally a year ago. It ran into resistance in March and May because Chairman Powell, despite good economic data, basically said to the market, we're not ready to taper yet. So you saw that trade come back off. And then, of course, as other people have speculated that, we're due for another reopening trade. So I think there's places you could be if you want to be invested.
Okay, well, what are those places? What on a technical, but on a technical basis, away from fundamentals, on a chart basis, which are the sectors, which are the opportunity to participate if we keep advancing?
I would definitely look at the healthcare space. Like I said, the financial space, the energy space is really interesting here. But again, I'd be hesitant to chase this market at these levels.
Mike, good to catch up, to get your view. As always, come back soon, Mike. Too long. Mike O'Rourke there, Jones Trading Chief Market Strategist on this equity market. There is a range of views out there. I think there's a caricature of Wall Street we could explore just a little bit, Lisa, where we seem to paint this picture that everyone that comes on the show says buy, buy, buy. It's not quite that way. We started the show this morning by looking at what HSBC had to say, underappreciating the growth slowed down, staying away from the cyclicals, and comparing and contrasting that with what we've heard from JP Morgan and Marko Kolanovic saying, growth's ahead of us, looks good, buy cyclicals. There is a divide out there.
Yeah, I think that your point is also well taken, that when you say you push back against the bearish view, it's not a pushback or a call that things are going to be positive. It's that perhaps the pain point has been being bearish, right? Being bearish on the dollar, being bearish on bonds. That has been the pain trade going forward, trying to short some of these instruments and saying this time is different. And I think that that's one of the Pavlovian responses in markets that are getting quote unquote complacent, because you know what? They've been wrong when they've been anything but complacent.
Even if they got the economic call right, they got the market call
Correct.
wrong. What did the S&P do last year? Up 16% on the S&P 500. If you just asked someone on the street, Tom, last year, where was the equity market, given what the economy had done, they're not going to turn around and say up 16%.
Yep.
Most people aren't.
Well, that's what they call the bulls here, the double-digit kind of returns we're seeing 3-4 years as well. John, can I bring to your attention an important research note? You're better on this than I am. Rabari over at Citigroup making very clear he wants to buy the euro dip off the German election angst. It sounds like, inside baseball and not important, but I'm sorry, that's something we've underreported in primetime New York that's actually really germane.
It's a call on the politics then, Tom? From
It's
Citi?
a call on the politics that if Abraham sees a dip in euro, he wants to step into it with optimism on the euro experiment.
Interesting. Lisa, euro dollar right now, 117.65, down 0.4%.
This is just as fuzzy as everything else. I'm trying to understand what the benchmarks are to determine the trade here. Is it monetary policy? Is it the euro experiment on a broad level? Is it virus cases? I mean, honestly, it's been a moving target in terms of the metrics to follow.
I'm with Doug. I know you've got to make a forecast. You've got to make a forecast. I get it if you work on Wall Street, but the range of outcomes going into next year is
It makes
so
for a
wide.
rapidly well-paced week.
Equities down by 0.25% on the S&P.
Thanks, Tom.
Should we talk about football too? Do you want to do that? 19 minutes away from jobless claims and retail
Chelsea.
sales. When's that, Tom? Saturday or Sunday?
Sunday early.
Nice.
I've cleared
You know
my
more than
schedule.
me now.
I've cleared my schedule.
There we go. We're down 11 on the S&P. We're negative 0.2%. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. This may be the start of a new era in human spaceflight. Elon Musk's SpaceX has launched 4 civilians on a 3-day orbital excursion. The passengers in the Dragon Crew capsule include tech billionaire Jared Isaacman and a childhood cancer survivor. It's been reported that Isaacman is paying SpaceX $200 million for the flight. He's also donating $100 million to charity. Turns out those latest cruise missiles tested by North Korea this week were fired from a train. That's according to the country's official news agency. It suggests that Kim Jong-un has a new option for a quick strike against U.S. allies in the region, such as South Korea and Japan. Senate Republican leader Mitch McConnell says raising the debt limit is strictly up to the Democrats. McConnell rebuffed Treasury Secretary Janet Yellen's call for bipartisanship. A spokesman for McConnell says Democrats are engaged in a reckless tax and spending spree and they'll have to boost the ceiling on their own. The government could run out of authority to spend next month. Volkswagen says the semiconductor shortage won't ease till the second half of next year. That crisis has cut auto production worldwide and left showrooms with fewer models to sell. On the other hand, the tight inventory has led to soaring prices. That helped VW's U.S. business turn a profit in 2020 for the first time in 8 years. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now. Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Right now, what we're seeing with the potential collapse of Evergrande is the question facing policymakers in Beijing is Evergrande systemic? Is it too big to fail? Is it their equivalent of AIG? And so what we're going to see is the potential for Beijing to step in, if not directly, certainly indirectly, to take on some of that debt and reassure the people in China that their property is safe.
Wonderful to catch up with Bill Lee. It always is. William Lee there, the Milken Institute chief economist from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Jobless claims and retail sales 12 minutes away in America. Futures down 10 points, negative 0.2%. Yields higher. Let's call it a basis point, 130.73 on 10s. And your euro is weaker. TK, we're down a half of 1% on euro dollar, 117.60.
We bounced around today, John. It's been a lot of fun, but let's be serious. In 12 minutes, this is important for all on global Wall Street.
And then we're going to hear from the president, Tom.
Yeah.
At 1:45 Eastern Time, the president delivering remarks on leveling the playing field in our economy. That conversation coming up a little bit later this afternoon.
I have learned from Admiral Stavridis that submarines matter. They matter for a lot of reasons, and one of them is they're really expensive to build. Terry Haynes joins us now from Pangaea. We're thrilled he could join us after this huge announcement of this agreement. 70th anniversary of Anzac. We've got the idea of the U.S., Washington, London, and Canberra joining together for Australian subs. Terry, this is about General Dynamics. It's about Groton, except my reading is they're going to be built in Australia. How do you perceive U.S. submarine technology will be built, say, in Cairns, Queensland, where the Navy sits?
That's a good question, Tom. I am not going to pretend to be totally familiar with Australia's boat building capability, but they've got some. And I mean, honestly, they've got some. And, you know, that was one of the first things I thought of, which was, they're talking about building this technology down there. My assumption is, and it's an assumption, is that they're going to have to provide submarines sooner rather than later, just to start the alliance, with the idea that these are built in Adelaide over the next couple of years.
Let's be clear, folks. These are nuclear powered. They're not nuclear missile subs. These are conventional warfare subs. Terry Haynes, this is about July 31 of this year, the second vintage. The Virginia-class Hyman Rickover was christened in Groton. It is about our modern U.S. technology. From where you sit, will there be a debate in Washington about giving too much away to Australia in terms of cutting-edge technology?
I think Washington generally will be happy with this arrangement. Folks should remember, the Trump-China policy was really the most bipartisan thing that happened in Washington during the Trump years. Biden has now subtly shifted to more of a containment strategy. China at the same time feels emboldened for a lot of different reasons. It's shown that with military exercises over and around Taiwan and the South China Sea, Spratly Islands, and elsewhere. Afghanistan probably emboldens them more because they see a hole in the middle of Central Asia. In the middle of all this, what you've got this new so-called AUKUS initiative that's designed to improve deterrence and stability, and frankly build on the old Australia, New Zealand, U.S., Southeast Asia alliances, and reinvigorate those. It's engendered a predictable response from China, asking to shake off the Cold War mentality, and interestingly, not building exclusionary blocks targeting or harming the interests of third parties, which is pretty much exactly what the West thinks China is doing. So the net of this is that pure military deterrence is going to be a significant part of response to China's aggressiveness from a Western perspective.
Terry, I'm trying to understand the overall approach and the priority of the U.S. administration when it comes to China. Is it containment? Is it supply chain issues and trying to work out some of the kinks? Or is this a technology-driven battle where basically both countries want preeminence in that sphere? I mean, where do you see the Biden administration putting most of its efforts?
I think the answer to that is yes, Lisa. By the way, you've hit the three nodes and quickly, so I won't repeat them. But containment, I always thought, was a big part of this, and been saying so for months. And I think the containment policy alone is part of the China emboldenment, unfortunately. So, but this is. And meanwhile, there are medium and longer term issues with supply chains and technology that need to be dealt with. The Biden administration, I think, is making an effort to start that, but I don't think they've been as aggressive as they need to be. And on top of that, what you have is the desire and the need to actually shore up purely military-based alliances and deterrences. And given China's more military aggressiveness in Asia, that's probably a necessary thing.
Terry, before we let you go, one thing that I love hearing from you is the probabilities that you put on various outcomes on domestic policy, in particular when it comes to Washington, D.C. What is your gamed out, most likely situation right now in terms of the corporate and individual tax rates and how much they could increase under Biden?
Well, I think the so-called human infrastructure piece, which includes those tax raises, still is only about 30% likely to pass. So, my base case is that you don't see tax raises, certainly, and you don't see tax raises anywhere near the $3.5 trillion, included in the $3.5 trillion bottom line. If Democrats eventually get to something, and I mean eventually, they're not in agreement on what the number is. They're not in agreement on what they should be doing underneath that umbrella. Those tax raises are going to end up being a lot more modest than that. So you're looking at, at worst case scenario, only about half of the tax raise, or even less than's being talked about today. So generally speaking, that's a market plus.
Terry, thank you. We've got some data to get to. Terry Haynes there, Pangea Policy Founder. From New York City, your data front and center in just a moment. We are 6 minutes away. Mike McKee in the studio early for this one, Tom. Retail sales and claims coming right up.
Two big reports. Which one's biggest, Mike?
Probably retail sales for the markets, because they want to know what the outlook is for consumer spending, whether the economy is slowing significantly. Jobless claims have finally gotten down to the area where we don't care a whole lot unless there's a big move.
This came up earlier, the idea of a shift from goods sector to service sector. You brought this up months and months ago. Where do we stand on goods sector consumption over to service sector consumption?
There hasn't been as much of a handoff as we anticipated. I was just looking at that this morning.
Were you?
The hard part
John,
about...
do you understand him? McKee gets in at like 7:52?
He comes in, Tom, you think he comes in at
Wanders
7:52? He came in at 8:23.
Yeah.
Got 60
I
seconds
just came in
ago.
a second ago. But
Mike, looking forward to breaking down the data with you. We'll do that in just a moment. Mike McKee standing by. It's nice when Mike McKee comes into the studio. You can know just something's around the corner. You just know it's important, Tom. That's
John,
right.
headlines here. I don't know if you see them there,
From the
John.
ECB.
From the ECB. This is after David Rubenstein's important interview. I thought that was actually quite
Classic President Lagarde, isn't it?
Yeah, go
We're
through
back
these
from the
headlines,
brink.
please.
We're not out of the woods.
Yeah.
The recovery in the Eurozone is clearly underway.
What's amazing is that's what Lisa said as we went to commercial the last break.
Hey, Lisa, you said it, not me.
I mean, honestly, try to translate that. That means
We're back from the brink. We're not out of the woods. What don't you understand?
It's economics. That's in Dornbush Fisher
it
Stars.
means finger to the wind.
You two are joking about this, not me. I don't want to get in trouble with the ECB again.
Again.
Economic data.
Euro dollar 117.62 from New York. This is Bloomberg.
The electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose with this new business area is to contribute and to create this biggest movement in the world for renewable energy. We will add even more products. We have solar panels that we sell, and now we have the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
Moments away from economic data in the United States of America. From New York City this morning, good morning. Going into that economic data, futures negative 12, down 1/3 on the S&P 500. Just a little bit of a dip going into retail sales and initial jobless claims in America. That data starting to pour out. With it, here's Bloomberg's Michael McKee.
Well, John, we've got some little bit better than expected news on retail sales. Retail sales come in down by 1.8% for July, but up by 0.7% for August. So July a little bit worse than it had been, but August is a little bit better than had been forecast. So we're looking at some decent numbers there. Looking at the jobless claims numbers. So far, Biden hasn't reloaded. Here we go. And we are looking at 332,000. That's an increase of 20,000 from the previous week's revised level of 310. So going in the wrong direction, but maybe somewhat seasonally affected here. Let's look at the retail sales numbers and see what we're getting in terms of movement here. The retail sales numbers for overall, as we mentioned, 0.7%, excluding motor vehicles and parts, 1.8%, and motor vehicles and parts were down by 3.6%. We knew the unit sales numbers were bad, and so this was kind of widely expected. Food and beverage stores up 1.8%, grocery stores up 2.1%. Could that be the fact that people are spending more time at home? That is good news so far. And then we're looking at the food and drinking places.
Please tell us
no
about that.
change at all, despite Tom's best efforts, which is a little bit odd because you'd think there'd be a little bit of a gain given the way things have been going. But it does fit with that narrative that people stayed home in August because of COVID. And of course, we didn't see any hiring in food and drinking.
John, jump in here with a market reaction, which sort of says to me it pushes against, disinflation gloom.
It's a shrug in the equity market. We're down 7 on the S&P, negative 0.2 on the NASDAQ, we're negative 0.4. Push it through the bond market, though. Just a little bit of a lift on the Treasury curve. Yields up by 2 basis points on 10s and 30s, 132 on 10s now, 30s at 188. How do you compare and contrast that, though, Tom? Take the control group, 2.5%. It's a really strong beat for August, but the previous number, that's an ugly revision.
Okay, well, you take a 3-month moving average is my answer, but my answer to all this, Michael McKee, is on retail sales. The control group is where the pros fall back on, but does a control group work in a pandemic?
It does, because basically the control group takes out things like auto sales because they're reported in the retail sales figures as a dollar number. The government, the BEA, uses unit sales figures. Also, fleet sales of autos go down as business investment in GDP. So they take those things out. And of course, gasoline we take out because it is so affected by price, although not much this past month, just up 0.2%. The other one we should mention is non-store retailers, up 5.3%. That's a significant
Is that like
gain.
Amazon?
Yeah.
That's like Amazon and Walmart.
How much?
All of those, up 5.3% on the month. So
Is that a ginormous number?
that is a big number.
You did it, Lisa. Good job.
Yeah, that's me, I'm sure.
shifts.
You're the one that's always talking about the Amazon boxes, Tom. I will say, though, Mike, just to sort of wrap this up, Tom said something about this idea that this pushes against the disinflationary feel that we had from the CPI report. Is that an accurate characterization? How much can we glean from this? Because on its surface, it feels like that's what it is.
Well, it's a marginal change because they don't adjust these numbers for inflation. So if you put inflation into it, they would be slightly smaller. But because of the drop in inflation during the month in many categories, it might be not much of a change to watch for this time. Overall, over the past year and a half, retail sales have been buoyed by inflation.
Michael McKee, thank you so much.
Thank you,
really interesting. We got a little bit of an advance in the market, a lift coming up here, red and green on the screen. And again, in the bond market, yield out to 1.33 gets my attention. This is really important discussion. Thomas Costner joins us with Pictet right now, Pictet Wealth Management. And Thomas, you got buried in your note a really, really, really important sentence. You ignore consumer surveys. Why?
I do, and I think it was the right thing to do because we've seen retail sales data that actually the U.S. consumer is fine. And I actually look at credit card data, and I see that, U.S. consumer is fine, is happy to go and spend and take more credit. So I'm a bit more, dismissive of recent consumer surveys. I think they're maybe affected by the end of the jobless benefits. But otherwise, I think the U.S. consumer is fine. And I think we have some data today showing that, the U.S. consumer is fine and can withstand so many headwinds like Delta, like the end of QE and so on and so forth.
It's a tidy number. It's a strong beat. Hesitant to move on from retail sales too quickly. But Thomas, just your view on the business surveys we get from the regional feds. We had the Empire Manufacturing Survey out earlier this week. That was really nice too. The Philly Fed Business Outlook right now, that's a big upside surprise. This is for September. What's the early September data telling you, Thomas?
Well, if you look at the NFIB survey, the Empire survey, I think they're actually much better than expected. So, the order books are actually looking fine. Maybe actually too fine, because the risk maybe in 2022 is that we have so many orders that actually there's a risk of having some fake orders as companies, order too much and maybe they cancel orders down the line. But I think so far we're still in the early phase of this, accelerating business cycle. And things are fine. There are some bottlenecks, I must say, some bottlenecks affecting cars, for instance, but they are very niche products. Otherwise, the U.S. consumer is fine. U.S. manufacturing chains are okay, more or less, given the supply chain bottlenecks. But otherwise, the order books look fine. So I'm actually quite positive on U.S. growth, especially in the fourth quarter.
Take that positivity then and push it forward to the 22nd, the Fed decision. How does this all fold in to that?
Well, so the Fed has already well telegraphed that, they intend to taper before the end of the year. I think they won't do it next week because, first of all, I think Jerome Powell does not want to rock the boat. He's seeking renomination, so he doesn't want to rock the boat and move financial markets too much. So he's going to probably wait until November. But otherwise, I think, the pressure is there for them to taper, given this, strong data and also ongoing strong inflation. I think the regional Fed presidents are going to want to push towards, firmer schedule on tapering. And maybe actually they're going to put hawkish dots in there.
Thomas, are you saying that even if the data supports the idea of tapering their bond purchases earlier, that Fed Chair Jay Powell would not do so in order to curry favor politically?
Well, what I'm going to say is that the Fed is like a super tanker, and you don't change direction so quickly. They've indicated they want to do it before year end. I think they are going to stick to that view, and I don't see any sign of rush coming from Jerome Powell. So, I think he's going to indicate that it's coming soon, but I think they are unlikely to do it next week. Also, we have some deadlines in D.C. as well.
That's interesting.
It's not the only one saying it.
I know, but it's interesting to me. And the whole idea is, to me, frankly, John, is the data actually backing a taper that they're not going to do because of other motivations?
But some people are asking that question.
Yeah, I think it's out there. It's part of the mix of the data and the huge variance we see here in opinions. Tom Costard, the last time I fell off my seat before today was at the Zurich McDonald's when I figured out, this is right down from Bahnhofstrasse, where Pictet has their wonderful office, over the price of a cheeseburger in Zurich. This morning I fell off my chair because you're talking about a Volcker moment. You got to be kidding me that we're going to see a Volcker moment at a 3 or 4% inflation rate. Really?
Well, I'm highlighting this as a risk because I think the baseline is that the Fed will ignore high inflation. And when I say high inflation, it's 2 to 3% inflation. However, the problem may come if inflation comes at 4% next year.
Are you kidding
me?
There will 4% be a risk we're going to panic.
I mean, it's quite unlikely, but it's not impossible, right?
Thomas Kostberg, thank you, sir, from Pictet Wealth Management, a senior economist out there.
Volcker
we got some good Zurich stories that I'll share one day. Should we skip those now?
Wait,
we should
hold on a
skip those
second.
now.
No, I want a fact check. Did he actually fall off his chair in a Zurich McDonald's?
He did not go to McDonald's.
You go.
We don't go to McDonald's in Zurich,
Number
Lisa.
2 value meal in Zurich.
I think you
$14.
I can share where we go another time. Euro dollar down 0.5%. Session lows. Bit of a delayed reaction to a really decent beat on retail sales in America. Euro dollar 117.58, negative 0.5%. And an extra basis point or so lift on a 10-year, Tom, up 3 or 4 basis points now to 133.
John, I know you got to go get prepared for your interview with Cisco about the food industry in America.
Well, Lisa was doing that.
But
they rejected me.
Can I just say that in all that we've done this, and I know it's a pandemic and the great uncertainty, true uncertainty, my head is spinning interview to interview over the different views we're receiving from well-meaning, cogent people.
Really wide range of outcomes for 22 and beyond, Tom.
Yeah, that's
true. For the economy and for policy too.
I mean, the only one here calm is Lisa, and
always.
That's because she's looking at yields.
I sense the sarcasm just dripping out of your
Kathy
voices.
Jones of Schwab is also looking at yields. She'll join us.
I think this
on the
Tang
Open
went up with SpaceX and they
this
brought it
morning.
back down.
With what in it?
And I'll catch up with Chuck Robbins of Cisco later in the hour.
Oh, you
in
don't
the
say.
9 o'clock. That show begins in 20 minutes' time when I'm on my own.
Good to talk to Kathy Jones. Seriously,
relax.
folks, stay tuned for that on Bloomberg Television. Kathy Jones can frame out that huge issue over yield.
There is a whole chapter in Drawdown Meditation dedicated to that Zen experience of moving from this show to the next.
Oh, God.
I can't wait to
And
hear
that
about it.
20-minute gap.
Lisa, I saw the cover for the book, the
Oh, yeah.
treatment that came in. I mean, W.W. Norton wouldn't publish it. It was
You
just
didn't like
totally
that photo? I
inappropriate.
thought that was a good photo, Tom. You didn't like that. Futures,
No, I thought it was
down
great.
6. We're negative
Yeah,
at 10
Mrs.
to
Keene
1%.
fell off her chair.
Did you share that?
At McDonald's?
Dan, let's not talk about that picture. We're down, down a little
pictures
more
are
than a
you guys
10
sharing?
on the S&P from New York City this morning.
Can't say this on radio.
Good morning. Retail sales really tidy in the United States of America. The dollar showing some strength. Euro dollar session lows. And equities, where are we on the S&P? We're down 6. We're negative a tenth of 1%. Thank you, sir. John Keane and Tom Farrow alongside Lisa Bramwitz. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. It won't be all sightseeing for the first all-civilian crew of a manned space mission. Elon Musk's SpaceX launched the 4 into orbit from the Kennedy Space Center. They will conduct some medical research during their 3-day excursion. The passengers include tech billionaire Jared Isaacman. Reports say he may have paid $200 million for the flight, plus he'll donate another $100 million to charity. President Biden and the U.S. military have defended calls that Joint Chiefs of Staff Chairman Mark Milley made to China in the waning months of Trump's administration. A new book says the general spoke with a top Chinese general twice, telling him the U.S. would not suddenly go to war. Pentagon spokesman says that's part of Milley's job, and President Biden says he has a great confidence in Milley. Some Republicans say he should be fired. The European Central Bank will look at the trading operations of major banks as part of climate stress tests next year. Authorities decided that an assessment of loan books alone won't give enough insight into the fallout they face from global warming. European banks have already warned they're not ready for next year's landmark tests. Lucid says a version of its debut sedan has been confirmed as the longest-range electric vehicle ever rated by the EPA. The company says the agency awarded it an official rating of 520 miles of range. That's more than the Tesla Model S. Still, it plans to build fewer than 500 cars with those specifications, and they'll cost $169,000. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
That traditional Inflation. So you will have pondered this a great deal. I look at your data. Your inflation is down for 4 months in a row. You're at a 6-month low. Simple question. Is inflation, in your view, now transitory, and have you passed the worst of the spike?
We certainly feel, and we have passed the worst of it all. Our projection is that inflation will continue to go downwards throughout 2021 and also throughout the course of 2022. Our target is that in 2023, we will be moving to single-digit inflation.
Are the supply chains still much impacted in Nigeria, or do you see a relief there?
We see a turn because transport sector in the last quarter GDP report has picked up, and it's moved upwards. Still not in the positive territory, but it's moved up very, very significantly.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Revenue growth's been fantastic because of kind of a generational shift in driven by demand coming out of COVID. But as the dust settles into next year, I think it's going to be a focus back on, wait a minute, which businesses actually are built to last? Who has the pricing power? Who can hire the best labor? And who has much more diversified supply chains?
The gentleman from South Africa, Charles Cantor of Neuberger Berman, who has always spent and folded behavior of management into his guesstimate of who will prosper in the stock market. This is a joy for Lisa Bramwitz and myself right now. It's Nudge, the final edition. It gets thicker on radio. I'm showing the thickness here on TV. Cass Sunstein did not want to do this, but Richard Thaler said, we got to do it, Cass. Cass Sunstein, Richard Thaler, Nudge. We're thrilled to bring this to you right now with a laureate from Chicago. Richard, I want to take Nudge and your work over to this crazy baseball season. Your Cubs are in total disarray. The San Francisco Giants are ascendant now, and the gentleman that has driven forward the San Francisco Giants experiment is a Berkeley Thalerite. Tell us how the nudge in the behavioral economics folds into the success of the San Francisco Giants.
Well, you know, Moneyball really is a book about behavioral economics. And when Cass and I wrote a review of Moneyball, and that's when I first met Michael Lewis, and it was an epiphany for him that the stuff he had been writing about in Moneyball, there was this whole academic field about taking advantage of other people's biases. And that's what led to Michael's book, The Undoing Project. So this makes total sense. And Farhan could have been a very good behavioral economist. Berkeley is one of the top 2 or 3 departments in that area. And, you know, his mother was disappointed he went into baseball and not into economics.
Professor Thaler, let's go to the biases and blunders of your informative must-read book, Nudge. Great. What are the biases and blunders of COVID in your update?
Well, I must say we don't dwell on COVID. We were writing it in the midst of COVID. And as we all have learned, it changes every month. So there are passing references. The publisher said, why don't you add a chapter on COVID? And we knew it would be out of date the minute the book came out. So we talk about it off and on. I think right now, the key thing that we're dealing with is how do we get people vaccinated? And is nudging enough? And if not, what else do we need? And my conclusion is that we've now reached the point where there are so many people with very strong, ill-informed opinions that stronger measures are necessary.
Richard, I got to say, I thought it was kind of funny that you called it the final edition, so you never would be tempted to write this or rewrite this again, and that you thought, well, it is COVID after all, so it's what else are you going to do? Why not rewrite this bestseller and preeminent book in the behavioral economics field? What, though, was the biggest change in how you viewed the way we make decisions from the first edition to this final edition?
Well, a lot of it was just getting rid of anachronisms. We had a whole chapter devoted to a very clever solution to the same-sex marriage problem that just legalizing it was even better. So I think one of the things we stress in the new edition, which is probably 2/3 new, is that exactly this point that sometimes nudging is not enough. And there's an entire chapter on climate change where we start with saying what we need is a carbon tax or cap and trade. I am with every economist in the world on this. If we don't get the prices right, we're never going to get anywhere. I think it's ridiculous that the bill that's going through Congress now has no carbon tax or anything resembling that. We're going to pay $4 trillion and not tax something that is killing the world is shocking to me.
Richard, you said that sometimes nudging is not enough. Is the answer an economic one, basically causing prices to go up dramatically, or is it just a legal one?
Well, you know, a basic principle of economics is that it's more efficient to drive behavior through pricing. And this is especially true for climate change because so many of the decisions are being made at the industrial level. How we generate power, how we manufacture, what we manufacture, how do we transport things around the world. These are all business decisions, and businesses react if the price of fuel triples.
Professor
well, you know, do we want our grandchildren to be able to live in a comfortable world or not? If we do, we're going to have to suck it up. Sweden has proved that it's possible. $120 per ton, and their economy is thriving. We can do it.
We would love to continue this conversation, but we run out of time, and I greatly regret that. I've got about another hour of questions for Richard Thaler. He is at Booth School Chicago, the laureate, a Cubs fan. He's in therapy for that right now, and also the book with the wonderful Cass Sunstein, Nudge, the final edition, Thaler and Sunstein. Look for that. Now, I love what Kahneman, the laureate, says. Few books can be said to have changed the world, but Nudge did. That's what it did. Lisa, talk about nudge. We got to nudge ourselves towards a market. And once again, after what, 3 sets of data this week, red and green on the screen.
Yeah, it's, again, bias. If you want to talk about where people are being nudged, they're not being nudged by the data. The data is basically confirming their view and their belief in what will happen. I do want to say, though, really this question of whether we are entering something of a softening or a transitory kind of a trend with respect to inflation, with respect to spending. Today's retail report actually, I don't know, muddied the waters a little bit on that front.
Oh, yeah, muddy the waters, absolutely. But, you know, again, I go to a moving average model there. I never look at 1 month. I just simply don't do it. I know that I'm not supposed to do that with the media, but, hey, 3-month averages probably are safer. I'm going to look, Lisa, at a 133 10-year moving out 4 basis points. We are distant from that. Are we going to get to 127 feel?
Yeah, and that's also kind of compelling. I got to say, there was a story about how hedge funds are restarting some of their short positions, their bearish positions on 10-year notes. Got to say, the bears have just been burned so many times. At what point does this set up a very bifurcated market?
Let's bury the bears one more time. This headline just breaks. Maybe Mr. Farrell will have this with Paul Sweeney in the 9 o'clock hour. This is the shipping giant Maersk, and they readjust higher, to say the least. They go from a center tendency 15 billion to 18.x billion. That on earnings before interest and taxes. They jettison overboard the D and the A. Red and green on the screen, the VIX 18.63. Please stay with us on Bloomberg Radio, on Bloomberg Television through the day. Good morning.
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there, so that the girls over there can have the opportunities to continue their path as well.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this accompanying surge in deaths as well.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York City, for our audience worldwide, good morning, good morning. 30 minutes away from the opening bell, a big upside surprise on retail sales, giving this market a little bit of a lift. Still negative on the session, down 1/10%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
From New York, we begin with the big issue, looking to forecast the seemingly unforecastable.
We are seeing a little bit of a deceleration within the data.
Bounces in a downtrend.
Reopening story being impacted a little bit. And then same with CPI.
The short-term impact is clearly through sentiment.
Sentiment is falling.
Airfares and passengers attending flights are also being impacted.
A decelerating growth environment globally.
It's going to be something that the Fed is going to be watching very closely.
The Fed's in a really, really difficult position right now.
There's the tapering decision, which we know that the Fed is looking at.
It's going to be hard to do so if the economic data fails to show up.
The Fed is going to make up stories to fit their story.
I just don't know if I see the pressures right now.
Whatever the Fed does or is looking to do could probably be viewed as wrong.
It is so hard to get a read on this economy. Let's have the conversation right now with Neuberger Berman's Eric Knudsen and Kathy Jones of Charles Schwab. Kathy, let's start with you. Retail sales, decent upside surprise. Your reaction?
Yeah, I think that we did see a little hint of the COVID impact in these numbers from the first glance that I looked at them anyway. It looks like a lot of the increase was spending in grocery stores as opposed to bars and restaurants. But nonetheless, I think it speaks to the fact that there's still a good growth and demand story in the economy. I mean, consumers have money, they have high savings, job growth is picking up. And I think that if we're going to see economic surprises at this stage of the game, they may be on the upside.
Eric, I want to talk about the data, but the data relative to the estimates. And to Kathy's point, to the upside, that phrase to the upside, we have had the data come through on payrolls and it's surprised aggressively to the downside. Retail sales aggressively to the upside. Why is it so hard to get a read, to really forecast with any precision where this economy is going?
I think it's because we are at this very interesting inflection point. We're at the transition in the business cycle between early cycle recovery and mid-cycle expansion. That is a time when you normally see both volatility in the data and volatility in markets. I mean, you can throw in some additional examples. CPI was surprisingly soft relative to expectations, and PMI, some of the most recent high frequency data has shown that there's probably a bit of a growth lull here in the third quarter, but we think that that is part of both the impact of the Delta variant, other areas of uncertainty, but just this choppiness as we transition in the cycle. And we do think we're going to go back to more of a reopening kind of orientation into the fourth quarter and into early 2022.
So just to put a time frame on that, you just did, Eric, just to build on it, how long traditionally does it take to work through these transitions, these inflection points?
I mean, it can be 3 to 6 months. It can be longer. The other thing that usually happens with this transition point is some kind of a drawdown in markets. Often a 10% drawdown would be typical of this transition point. It's something we've been looking for in terms of volatility. The interesting part of this transition is that you have not seen that kind of a drawdown. You've seen there's so much liquidity out there that that investors are buying 1, 2, 3% dips as opposed to seeing more of that 5 to 10% drawdown, which would characterize this kind of transition in terms of economic dynamics.
We've seen that through this year for sure. Your equity market right now, unchanged on the Russell, negative on the Nasdaq, down 0.2, and basically unchanged on the S&P 500. Mike McKee, the data, retail sales, better than expected. Then jobless claims doing their thing. Just run through it all for us.
Yeah, John, this is what I would call a morning of good news, but
The retail sales numbers come in better than expected. As you can see, up 0.7%. The forecast was for a 0.7 decline. And the control group comes up with a 2.5% gain after a 1.9% gain. Now, the control group's what goes into GDP. And so we end up with sort of a net over 2 months for the third quarter so far of about 0.6%. Not a big increase, but we did see a number of big moves up. Non-store retailers up 5.3%, a very big gain. The one services thing that comes into the retail sales numbers, food and drinking places, 0.0. Kathy Jones mentioned earlier, grocery store sales up. It looks like the Delta variant pushed people back home again. Now, here's something that we didn't really pay attention to at 8:30, but the Philadelphia Fed Index rises significantly after the Empire Index rose significantly in the month of September. These are newer numbers, more contemporaneous. The only problem with the Philly Fed numbers is most of these subcategories fell in terms of new orders, employment, shipments. The news isn't as good as it looks, but it does show some confidence by manufacturers out there. Jobless claims we talked about, a real problem, up 20,000 this month, but maybe a seasonal adjustment issue. So where does this all leave us this morning in terms of your question about how do you forecast this? Well, if you take a look at where the Fed is at this point, the big changes in the sales numbers for the various months have come when fiscal checks got out there. And that chart not showing what we just saw in August, but we also got the child care stimulus checks, the child tax credit checks in July. And so every time we get a check from the government, it looks like we spend more. The Fed, as you can see with the blue line, just keeps on increasing its QE purchases, but that's not really having an impact. So can the Fed taper with these numbers? Sure, why not?
Next stop, the 22nd, full coverage from Michael McKee. Looking forward to that next week. The Federal Reserve decides. Full coverage on Bloomberg TV and on Bloomberg Radio. Ultimately, we're all gaming the what next. And there are, of course, opposing views. HSBC on the one side, JP Morgan on the other. Here's HSBC. The global growth slowdown is real, but expectations are not yet incorporating that sufficiently. As such, we retain our cautious view on cyclicals across asset classes. Now, compare and contrast that with the team over at JP Morgan. Despite concerns about the recent downshift in economic and business cycle momentum, we remain confident that strong growth lies ahead. We remain positive on the equity outlook and expect the S&P to reach 4,700 this year, surpass 5K next year. Kathy, I want to come straight to you on this. The what next? As we work through the transition that Eric has described, how do you have, with any degree of confidence, what comes next through next year and beyond?
Well, it's obviously pretty tough. I mean, this is a relatively difficult cycle, to say the least, to try to forecast. And most of us have had our hits and misses along the way. But I would say when I look at the underlying drivers behind, the economy and inflation, that biases us towards expecting higher rates because we have that easy financial conditions. Financial conditions are about as loose as they ever get, and that typically correlates to stronger growth, 6 to 12 months down the road. Now, a lot of it's been driven by credit expansion and by leverage, and that can backfire at some stage of the game, but we don't see what the catalyst would be. We also have, fiscal policy is still pretty easy. I know the fiscal impulse might be going down, but we still have a lot of money that's been directed into the economy, particularly to those lower income households with a higher propensity to spend. Small businesses got a lot of support that tends to support hiring. So we think the demand side is pretty good. And, the Fed has been very tolerant in this cycle of higher inflation, and we think that continues to boost the inflation outlook. So when we put it all together, it looks like, we're probably more in the JP Morgan camp saying we're looking for growth and inflation to continue to be pretty firm and that to lift yields down the road.
Kathy, you're in the JP Morgan camp, and Eric, I sense from your early comments that you are as well. Why is that, Eric?
Well, when you look at where we're likely to be 12 months from now, and again, there's a lot of short-term uncertainty, but thinking about where where we're going to be sitting when we're talking about this a year from now, we're pretty confident that we're going to still be at above trend growth, both in the U.S. and globally. We're likely to see CPI above the 2% pre-COVID trend line. Corporate earnings are likely to be up, double digits next year after a very, very strong year this year. Corporate credit fundamentals are still going to be very, very strong. We think that the Fed will be, they'll be hawkish on the taper, but dovish on the rate increase. And we think that they can, in fact, taper without significantly affecting overall financial conditions, similar to the way that Bank of Japan was able to taper in their last episode of tapering without really changing the interest rate environment in Japan. You put all of that together, we still got an accommodative monetary environment, still some fiscal impulse in the mix. 12 months from now, this is all going to still be a reasonably supportive environment for equities, for corporate credit. And so that, and if interest rates are reasonably well behaved, and our view is that interest rates are unlikely to go above, say, the 10-year Treasury, unlikely to go above 2, and in fact, may not get close to that level, you want to own equities in this environment. There's going to be you're going to continue to see a reasonable multiple on equities, relatively modest equity, multiple pressure, and you'll capture that additional return in the equity market. Probably the more interesting, dynamics are beneath the level of the index, and where are the opportunities beneath the surface there.
We'll dig into that around the opening bell. We'll hear from the Fed chairman, of course, next Wednesday. We'll hear from the President of the United States a little bit later this afternoon. We've already heard from him on the virus and the need for wider vaccination. Take a listen.
Vaccination is key to getting the pandemic under control and keeping the economy strong. And the first part of the plan is to vaccinate the unvaccinated. This is a pandemic of the unvaccinated, not anything else right now.
With more, here's Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, President Biden is pushing hard on this issue and pushing companies in the private sector to do more. He met with a number of executives yesterday from the likes of Walt Disney, Walgreens, and Microsoft, and they talked to him about their plans to expand requirements. Walgreens, for example, requiring all 250,000 of its employees in the U.S. to get the shots. Raytheon instituting a similar mandate, while Southwest is trying a different approach. There's the carrot, with the company offering workers 16 hours of extra pay if they get the vaccine, and then the stick with those who remain unvaccinated seeing their COVID pay guarantee dropped. And speaking of the airlines, we know that is among the sectors hit hardest by the pandemic, hit hard in 2020, then outperforming earlier this year as vaccinations improved. But they are now down about 23% from their peak in April, reversing course as vaccinations stalled out and the case count has picked up. Now, on the note of the case count, John, we are off of the recent peak, but still hovering around a 7-day average of 128,000 cases per day. Primarily, as the president alluded to, that is attributable to the unvaccinated. But there are also breakthrough infections of the vaccinated, and that is where the booster question comes in. We did just get data out of Israel that suggests a third dose does provide more protection to those 13 and older. The Biden administration wants to start rolling out booster shots on September 20th, but the CDC advisory panel isn't even going to meet on that issue until the 22nd and 23rd, so it could be at least a few days delayed, John.
Kelly Lyons, thank you. On the path forward, some final comments now from Kathy Jones for this particular segment. Kathy, curious, 10, 11 minutes into this program, you and I have had a conversation about the forward look, and the pandemic hasn't been a dominant part of that outlook. Why is that, Kathy?
Well, I think what we've seen is we're learning to live with the pandemic. Unfortunately, even as cases and deaths rise in some areas, we're still seeing economic activity continue. I do think it's a risk. Obviously, if we see a bigger outbreak, and we'll see consumers dial back some of their activities, particularly in like leisure and hospitality, travel, that kind of thing. So I think it's still a predominant risk, but I don't see the potential for the economy to close down in a significant way at this stage of the game, because we do have a high level of vaccination overall in this country. And certainly seeing the similar story in other major developed countries, like as in Europe, et cetera. So I don't think that that's going to be the big driver of economic, a big pivot point for the economy, unless it gets just significantly worse than it is now.
Kathy Jones alongside Eric Knudsen, sticking with us as we count you down to the opening bell, about 17 minutes away. Equity futures negative 6 points, down a little more than 1/10 of 1%, but off session lows with your movers at the opening bell. ahead of the opening bell. Here's Abby.
Yeah, John, very small moves to the downside for U.S. futures, weighing on the overall picture, big tech. And this has to do with yields, it seems, on that better-than-expected retail data, that economic data. Yields are popping as bonds sell off. No bid for those haven bonds. But, of course, yields popping, that pressures big tech and questions of valuation. Now, the ironic thing here is you only have the 10-year yield at 134. What happens if it continues higher? Not huge declines, but, again, declines for big tech. However, the losing side for yields higher is the winning side for banks. Take a look at all the big banks popping up by more than 0.5%. It looks like it could just be another reflationary day for the markets, John.
Abby, thank you. Looking at the bond market, a delayed reaction to some of that data. We do have a more material lift, up 4 basis points on 10s. We advance to about 134 on a 10-year yield. Up next on the program, President Biden's agenda facing potential delays. We'll head down to D.C. from New York. This is Bloomberg.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
They call it the Build Back Better plan, but it's really tearing down what helped us to be better. The last thing you want to do is to slap a bunch of taxes on the economy right now and have the economy go down and have workers in particular bear the brunt of that.
President Biden's economic agenda taking a major step forward with the House committee approving more than $2 trillion in tax hikes. But the Build Back Better plan facing a challenge within his own party, with moderates and progressives remaining at odds. For more, let's head down to Washington and catch up with our correspondent, Bloomberg's Anne-Marie Hordern. Morning, Anne-Marie.
Good morning, John. Yeah, the president just continuously is presiding over what is a divided party at times when it comes to the path to get to this reconciliation package. And although we did see significant changes from the House Ways and Means Committee in terms of taxes, there are two issues regarding taxes that we need to be paying attention to going forward. One, the Senate Finance Chair pretty much indicated that he wasn't happy with the fact that there was very little inheritance tax. The Biden administration has wanted to do up taxes, not just in income, income, but also an investment inheritance. And that was not possible given the Democrats did not have the support enough in the House for that. The second is going to be SALT. We know that a number of Democrats in New Jersey, New York, California, these high tax areas will not vote and get on board with this massive package if there is not a better reduction in terms of SALT. So these are two issues that the president is presiding over. And then, of course, the big question is the overall figure. $3.5 trillion does not sit with two senators in particular, and that is Joe Manchin of West Virginia and Kyrsten Sinema of Arizona. And Jonathan, they were at the White House yesterday meeting with the president. No details of the meeting. They said that they were constructive, but we really need to see if the president is able to get those two senators on board. Without that, there's no deal, period.
And we haven't even talked about the debt ceiling debate. Anne-Marie, thank you. A Washington correspondent down in D.C. Joining us, I'm pleased to say, we're lucky to have JP Morgan's David Kelly join Eric and Kathy as well. David, I want to come straight to you. Can you tell us the story of an old house with a box of dynamite in the attic?
Yeah, well, I think about that when I think about the debt ceiling. I mean, it's like this old house with a box of dynamite in the attic, and every few years the children take it down from the attic and start playing with it, and the owners just don't seem to think there's any problem here because it's never blown up. The problem is that every generation of children get more and more reckless, and when I look at the games they are playing with this debt ceiling, I mean, we need to raise the debt ceiling or suspend the debt ceiling by the middle of October to prevent a significant global financial problem. And, you know, of course, what we should do is simply get rid of the debt ceiling. It is a pure political football. It doesn't restrain the growth in debt in any way. But it is dangerous because both sides are still playing politics with this. And sooner or later, somebody's going to make a miscalculation.
Well, David, if the kids are politicians, the parents are the markets, because the parents just shrug their shoulders and let the kids play. Do you think we should be shrugging our shoulders this time around?
Perhaps not. I mean, I think there's a lot of risk. It's, you know, the debt ceiling is one risk, but there's also the risk of a government shutdown if we don't pass a continuing resolution by September 30th. We could have a government shutdown, and then, as you were just talking about, there's a lot to be negotiated within the Democratic Party about the infrastructure bill and the reconciliation bill. Now, maybe there is a compromise there, but it's a complicated story, and I hate to see this much complication because everybody thinks they've got a way of getting it all to work at the end, but maybe they don't. And so I think it's important that we get some solution. We have to pay attention to the calendar here because we are running out of time.
Kathy, as a market participant, what can you do apart from doing nothing?
Yeah, that's the trouble with the debt ceiling. You know, even in 2011, when we did hit that debt ceiling, we did have a partial government shutdown and we risked default. Treasuries rallied. And so I guess the answer there is there's not much you can do about it except have some defensive positioning. And ironically, that's probably in treasuries because the initial reaction would be a flow to safe haven.
That is the ultimate issue for a lot of people in this market. Eric, your view on what's happening down in D.C., please. The range of outcomes for this economy seem to me to be very wide. The range of outcomes down in Washington seem to me to be very wide. Can you make an investment decision based on what you think may or may not happen down in Washington?
I wouldn't want to try and make decisions based on some kind of prognostication about political outcomes in Washington. I would simply observe agree that their range of outcomes is incredibly wide, that it is likely we are going to see amplified volatility in September, and October, which tend to be more volatile months. And that is relatively unpriced in markets. Earlier in your show with Tom, you were talking about how very little was priced in terms of concern around the debt ceiling. I think that represents potentially an opportunity to take some more defensive positions and also to try and capture the benefits of volatility. You can write insurance, which is pretty expensive right now, and you can get a pretty attractive premium and take a portion of your direct equity exposure and just instead of taking direct equity exposure, write some equity insurance and benefit from what is likely to be some higher volatility over the coming 6 to 8 weeks.
David, can I come to you on that as well? What the market call would be off the back of this conversation?
Well, I think that's right. I think we will in the short run probably see some more volatility, but I just hate to try and time things around this. What I think what I think is a better way to invest is to look forward into 2022. I think it's a reasonable bet that eventually we will know where we stand in terms of fiscal policy and indeed monetary policy as we go into 2022, and the Delta variant should subside. So then you're in a higher interest rate, slower growth economy, and I think that will allow for a rotation back towards value, back towards international. But I think the most important thing is make sure you understand the valuation of the assets that you own as you go into 2022, because there is volatility coming. Then I think that's followed by higher interest rates. And I think both of those things could be dangerous for the most highly priced assets and markets.
We're going to have that conversation next. David, Kathy, Eric, sticking with us. Coming up, the morning calls and later, correction concerns growing on Wall Street amid fears of complacency and stretched valuations. From New York, this is Bloomberg.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Coming off the back of retail sales, yields a bit higher, dollar a lot stronger, equity's not doing much at all. Equity futures down about 0.1%. Going into the opening bow, that's the price action. Let's get you some morning calls. We begin first up with Piper Sandler, downgrading Beyond Meat to underweight. The analyst calling current estimates too high, with channel checks pointing to weaker growth. Your second call from JP Morgan, downgrading Wynn Resorts to neutral, seeing too much uncertainty after the government moved to tighten its regulatory oversight in Macau. And finally, Credit Suisse upgrading Cisco to outperform, seeing numerous outlets for supporting growth after attending the company's Investor Day event. That stock is up by 0.9%. And we'll catch up with the CEO just a little bit later this morning. From New York City this morning, good morning. Pushing back against the correction crowd. That conversation next. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Next up for this market is a Fed decision next week, September 22nd. Off the back of retail sales, plug it into equities. We don't do much. Equity futures are down a little more than 0.1% going into the opening bell. The S&P 500, -6. The opening bell in New York City ringing, switch up the board and get to the bond market. We do something in treasuries. We've got a lift on 10-year yields by 4 basis points to 133.95. Let's call it 134. Ian Shepherdson of Pantheon Economics. Write off the U.S. consumer at your peril. An upside surprise on retail sales, driving a little bit more strength into the dollar. Dollar strength, the story through G10. Euro dollar down 0.5% to 117.56. And crude, soft, a weaker lower, -0.25% to $72.40. That's the cross-asset price action this Thursday at the market desk with your movers. Here is Abby.
John, it does seem that that surprise move or that bigger move that you were just pointing out for the 10-year yield backing up by 4 basis points really influencing stocks this morning. You can see that Apple and Microsoft both lower. This, of course, as tech stocks move lower on the fears that valuation can come back into concern. But I would point out again, the 10-year at 134 is a lot different than earlier this year when it was above 170. So if that backup continues, let's see what happens for the biggest point influences to the major averages, but rising yields helping the banks. And take a look at this. JP Morgan, Bank of America, both up more than 1%. Now, we had the Bloomberg Commodity Index up in a big way yesterday, similar to stocks. Today, it's a different story. We have oil down just a little bit, as you pointed out, but copper down in a bigger way. At one point on its pace for its worst day in more than a month. Chevron at this point just about flat, but you can see the metal and miner stocks, Freeport-McMoRan and Cliffs Natural Resources, both down pretty solidly. And of course, on the day, as I'm sure you're looking at right now, John, financials, the best sector on the day on rising yields. Tech, the worst on rising yields.
That's exactly what I was looking at, Abby. Thank you. About 90 seconds in, financials up 0.6%. Yields up. Rising yields, a steeper curve. The banks like it. Information technology, as Abby pointed out, we're negative there, 1/3%. The S&P negative around about 1/10. Pretty much every single guest on this program right now who has come on this show for the last several weeks has called for the same thing. A correction. Joining us now on that is Kaylee Lyons. Hey, Kaylee.
Hey, John. Well, I would just like to say happy day 218 without a 5% pullback in this equity market. That is what today is. We haven't seen one of those since all the way back in November of 2020. We are talking 10 months without a pullback of 5%. And that is really unusual for an equity market that usually sees a couple of drops of that size per year. And so that has a growing number of people, as you say, warning that we are overdue for one. And I would just like to give you a better idea of how overwhelming that consensus around a correction has become. I would point back to the survey from Deutsche Bank that came out earlier this week, which found 58% of strategists expect a drawdown between 5 and 10% by year end, and another 10% expect a drop of 10% or more. So nearly 70% of them see a correction on its way. And it's not just the professional strategists who are in the chorus of caution, John. Small-time investors are getting more bearish as well. We got the latest II survey data today, and the bull reading fell by 16 percentage points. That is the largest drop going all the way back to 2019, excuse me. So people are seeing darker clouds on the horizon, John. I just have two questions. A, does it actually materialize? And B, if we do get the drop, is it then bought, John?
Katie, thank you. How many days is it?
218.
218. Katie Lyons, keep counting. Keep counting. I said pretty much everyone is calling for a correction. Some people aren't. Here's one. Jonathan Golub of Credit Suisse. Take a listen.
I think this whole, comment that we're due for a dip, that's like, going to the doctor and he says, you're really healthy right now. You've been healthy the last couple of visits, so you're due to get sick. I mean, the underlying economy is strong and growing.
David Kelly, that's a story you might be proud of. It's like going to the doctor and saying, I haven't been sick for a while, so I must be getting sick soon. David, why do you think a correction is due?
Well, I think we've got volatility coming up, and I think I completely agree with Jonathan that the economy overall is pretty healthy, but you got to look at valuations, which are pretty high on U.S. equities, and we do have problems around the world. We've got problems that, obviously with the Delta variant in the United States, how it's going to, how is it going to recede here? How quickly is it going to recede? But it's, I don't think investors should try and time a correction anyway. I mean, I think it's a reasonable bet to say there'll be a correction, but how are you going to know when it's going to start? And how are you going to know when it's going to end? I think a better approach to long-term investing is simply look at what you own and ask, is this going to make money in the years ahead as, we get past this pandemic?
Eric, can I get your view on that as well? This debate over whether we should or shouldn't expect a correction anytime soon.
Yeah, so what we're seeing is early cycle dynamics and late cycle pricing in markets. And that doesn't mean we're going to have a correction. As I said, with the liquidity we've seen and the way investors are buying any little dip, we could go through this transition from early to mid cycle without that 5 to 10% correction at all. The way we're positioning in portfolios is we want to have equity exposure through this period of volatility, given that, relative to bond markets and other alternatives, we want to have equity, exposure on that 12-month perspective. What we've done is we've tried to balance portfolios. So we've maintained a bias towards cyclicals and non-U.S. developed market economies that should do better in this reflationary and reopening environment. But we've balanced that by increasing our exposure to defensive, the long-term growers, so that we can, kind of benefit in whichever environment investors are pricing. And rather than seek to diversify in bonds, we're looking for other ways to diversify our portfolios, areas like commodities, areas like uncorrelated exposures that can help give us some ballast through this period of volatility while maintaining our exposures to equity markets.
I'd love to pick up on that final point and put that question to you, Kathy, where you get that diversification from, and the clients that you speak to on a daily basis, whether they're looking to move away from the Treasury part of that story.
There's certainly a lot of concern that treasuries won't deliver the same sort of diversification and a drawdown that they have in the past just because yields are so low. But I think that there's a confusion between expected returns and diversification, right? So it's hard to say, let's move into a potentially volatile asset class. Maybe it's uncorrelated, but also volatile if we're expecting volatility in the equity market. So, in our view, high quality bonds, meaning, treasuries, agency securities, investment grade, municipal bonds still deliver diversification in the event of a drawdown. If we get a market drawdown, chances are the catalyst is that we're expecting a slower economy and or there's some sort of crisis occurring. And in those sorts of environments, that's when high quality bonds tend to perform well.
David, I'd love your reaction to this as well. You're making the point not to try and position or time a correction, to look through it, to think about 22 and beyond and long-term investing. Can you walk me through how you'd acquire some defensiveness just in case? What you're suggesting to people at the moment?
Well, first of all, be globally diversified. I mean, we've seen more and more money pouring into U.S. equities. U.S. equities are now about 60% of the global MSCI ACWI index. That's too high, and a lot of people are very underweight international. Europe is coming back faster, and European stocks are cheaper. Japan is just about to surpass us in terms of vaccinations, and Japanese stocks are cheaper also. So I think having that international exposure is a way of getting better income. Because valuations are lower, I think you'll see a little less volatility out of those markets. You could also see a fall in the dollar if the U.S. market falters. So I think that's where I would go first, to sort of try to diversify a portfolio and also set it up for better long-term growth.
David, I'm pleased you mentioned Japan. I have to say, this must be one of the quietest rallies we've seen in global equities. The Nikkei is up more than 10% since the lows we saw at the back end of August. Can we talk about that a little bit more, Eric? The importance of global diversification in a portfolio on the equity side.
Absolutely. So in a typical cycle, you would have begun to see the handoff of economic growth from the U.S. to Europe, Japan, and then ultimately to the emerging markets. The spread of the Delta variant has delayed that process, as well as the very robust growth we saw earlier this year in the U.S. We now are expecting that handoff to begin. We've begun adding exposure in Euro stocks and TOPIX, and we think Japan will start to pick up additional momentum. as you say, quietest rally, 10%. People, still are under-owned in Japan. It's not a loved market, but you are going to see additional fiscal stimulus. Whoever ends up replacing Suga as the next prime minister is likely to pass as much as 30 trillion yen of stimulus. That's going to give some real momentum to that economy, and you're going to start seeing foreign investors begin to pay attention and invest more in Japan as that kind of economic handoff begins.
And not only unloved, it's just hardly talked about these days. Eric Knudsen, thank you for your time today. To Kathy Jones as well, and especially to David Kelly of JP Morgan. Thank you to all of you. To work through this opening bell about 10 minutes in, equities totally unchanged on the S&P off the back of that story. A little bit earlier this morning, retail sales, an upside surprise. The bigger move you're seeing is in Treasury yields and in the banks, specific sectors. Let's get to that story with Abby. Hey, Abby.
Hey there, John. Yeah, well, for sure, that move in yields is influencing sectors despite the relatively flat surface. So let's dig into it. And of course, tech is being pressured by rising yields as valuation concerns come into play. But a particular part of tech that's been under tremendous pressure, as you know, this week, China tech. We have the shares of Alibaba and JD.com really leading the way down, both down more than 1%. Alibaba closer to 2% on continued fears there beyond yields moving higher and valuation concerns, but of the China crackdown. And that, of course, this week has been the case for some of the casino stocks. Wynn Resorts down another 3% after having its worst 2 days in quite some time, as some officials in Macau are saying that the government may have to supervise. Melco, 100% of their operations in Macau yesterday down 14%, another 2% off today. Now, turning to another area, though, that's under influenced by yields. You were mentioning banks before taking a look at that strength. The worst sector on the day right now, materials, that has to do with the big slide in copper. At one point, its worst day in more than a month. Freeport-McMoRan down, Cliffs Natural Resources down. However, there are those big banks, that reflationary trade. Take a look at that, up 1.4%, John.
Dollar strength not helping that commodity story either this morning. Abby, thank you. About 10 minutes into the session, equities down 0.05%. You lift the lid on the benchmark on the S&P 500. Some interesting stories developing, though. Financials, as Abby pointed out, up 0.6%. Yields now higher by 4 or 5 basis points on a 10-year, pushing 135. Unlocking a bit of dollar strength this morning as well. Finally, some price action in G10. Euro-dollar negative 0.5% to 117.53. Up next on the program, Cisco delivering an upbeat sales forecast amid ongoing supply bottlenecks. Looking forward to catching up with Cisco CEO Chuck Robbins next from New York. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The boosters work, and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up that some. You get infected 3 times, your immune system is like, all right, this is a problem. it's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg.
Moving this forward is a priority. It's part of the discussion that senior members of the White House have with leaders in Congress as we're talking about what we want to get done in the coming months.
The White House turning its attention to the supply chain crunch. The administration planning another meeting with companies affected by the semi-shortage, including executives from the auto industry, consumer electronics, and medical devices. For more, here's Bloomberg's Kelly Lines.
Well, John, the White House is trying to get a handle on a chip crisis that only seems to be getting worse. When you take a look at lead times, they have now surpassed 20 weeks. So it's about 5 months from when you order a chip to when you actually receive it. And that line has really moved parabolically upward over the course of 2021. And obviously that supply and demand mismatch is a bad thing for a lot of companies. It is a good thing, though, for the companies that make the product in shortage. The chip makers, the Philadelphia Semiconductor Index closed yesterday at a record high. It's up 56% over the last year. Compare that with a gain of just 31% on the S&P 500. And now, obviously, John, the chip shortage is the most prominent supply chain issue companies are dealing with right now, but the list doesn't stop there. And Deloitte actually did a survey of 96 CFOs at North American companies, helps us understand the consequences. 44% of those said supply disruptions have increased costs by 5% or more this year. 32% said sales have fallen because of delays or shortages. And as a result, 69% are looking to diversify their supply chains over the next 3 years, John.
Kelly, thank you. Thank you very much. Turning to Cisco now. Cisco with a better outlook, and we can speak to the man himself, the CEO, Chuck Robbins. Chuck, let's start right there. A better outlook. Walk me through what is underpinning right now, the factors behind that better sales growth outlook for you.
Well, Jonathan, thanks for having me. And look, we've been undergoing a transformation to shift more of our business to recurring revenue and software subscriptions, and we've made a lot of progress. When I took over as CEO, we had roughly $3.4 billion in subscription software. We exited last year at the end of July with almost $12 billion. So we have much more predictability in our business. We have visibility to software revenue that hasn't been billed yet to our customers. And we had a remaining performance obligations last quarter of $30.9 billion. You couple that with the success we're seeing in the cloud space with web scale providers, the 5G transition, the Wi-Fi 6 transition, hybrid work, hybrid cloud. There's just so many tailwinds right now that we feel very good about where we are. And that was reflected in our Q4 product orders that were the highest growth in a decade at over 30%. So it's we wanted to express our confidence in the future, and I think we did that yesterday.
Your confidence in sales, Chuck. You know what the analyst community are talking about? They're talking about how much of that is going to fall to the bottom line. This came from Jefferies. We assume there's some conservatism in the guidance, as they'll certainly pick up some margin improvement as the business mix shifts towards software. Can you walk me through that, the decision to upgrade the outlook for growth, and just how much of that you can leverage, how much of it falls to the bottom line, given the transition you've just described?
Yeah, Jonathan, so we guided over the next 4 years 5 to 7% revenue growth and 5 to 7% EPS growth. And there's two real factors in the near term that are influencing the EPS side. Number one is that there are so many of these areas that I just described that we need to invest in. We made a decision to invest in these new silicon and new platforms that allowed us to insert ourselves into the next architectural transition with cloud players. And there's so many there's 5G and all the things that I mentioned already. And then the second piece is for some period in the foreseeable future, we have increased costs from a components perspective, from a COGS perspective, that is also negatively weighing on our gross margin. And so
We think that over time, we will absolutely continue to see the benefit of the higher margins from the software business. But right now, we felt like we needed to be prudent given the pressure from a components perspective.
Chuck, on the components, can you give me a time horizon, just your base case expectations? How much longer are you expecting these difficulties, if we can call them that, I think we can, to persist? Is it through next year, into 23? What is it for you, Chuck?
Well, I was listening to the prior discussion about it not just being semiconductors, although that's certainly a big issue, but it's power supplies, it's substrates, it's memory, and then we have transport constraints at ports around the world, and so our current view is that it will not begin to get better until at least into the middle part of next year. And it's still very fluid, so we're not even, we don't have a high degree of confidence on that yet. But we do have, Gartner rated our supply chain team #1 in the world across all industries. So what I do know is that our team is working hard, and at the same time, we're focused on all the positive aspects of what our customers are dealing with relative to the return to office, the hybrid work, 5G, all the positive tailwinds that we feel.
We catch up with a lot of economists. Chuck, I know you watch sometime. They all talk about these issues fading over time. Transitory, the T word, is the word of the moment. Do you sense a bit more permanency? You're in the market, you operate, you talk about supply chains, logistics, all of that. You're a company, a CEO. Do you sense some permanency to some of this cost pressure?
I think there's aspects of it that will be with us forever. I mean, when you see wage inflation, typically that doesn't go away, right? And so, but there are also, I don't think there's one answer. Like we see memory prices go up, come down, and that usually is kind of transitory. But some of these other increases that we've seen are sort of new to us, so we haven't experienced them in the past. So we'll have to wait and see. But as we've talked about, we've like others have implemented price increases. We'll continue to look at what we need to do in that space. But all we're focused on right now is trying to do the best job we can to meet the customer demand that we're feeling.
Do you sense some price tolerance in conversations with customers?
Right now, customers want technology. They want this stuff so badly that they're willing to pay more. And so, we're trying to be really fair about it, but there's a lot of cost in the supply chain. But the reality is that as our customers return to the office, they're modernizing their infrastructure. They're investing in this new hybrid cloud world. They're investing in all of these new transitions, and our job is to just try to get the technology into their hands and get the outcomes that they're trying to achieve as fast as we possibly can.
Chuck, final question from me, just in terms of the administration, they're focused on this as well. Have you spoken to the admin? What have you told this government?
Well, we talked a lot about the infrastructure side of it, and we're very focused on the digital divide. And this broadband aspect is so important. We've been talking about it for years. Obviously, the physical infrastructure for our country is super important. But we learned during this pandemic, we have to get broadband to every household in this country. We have to make sure that these children and these families have access to it, because that opens up opportunity, and that actually will help us. That's the first thing we need to do to actually help with some of the inequality that we see in this country. So we're very supportive of that, and we spend a lot of time talking to the administration about it, as well as supply chains and semiconductors and everything else.
Chuck, we appreciate getting some of your time this morning. Thank you, sir. As always, the Cisco CEO, Chuck Robbins there, on a better outlook for that company. That stock this morning up about 0.6%. Let's get the sector price action this morning and say good morning to our stocks editor, Dave Wilson. Hey, Dave.
Hey, John. You're looking at 9 of the 11 main industry groups in the S&P 500 lower in early trading, though industrials and consumer discretionary are down less than 0.1% at this point. Commodity producers really leading the way lower here, whether we're talking materials or energy. The only groups that are higher, well, financials and real estate. Interesting to see those two moving up at the same time, because, you've got higher bond yields, and that tends not to be so great for the real estate companies because, their relatively high dividends are part of the appeal of owning the shares. Financial stocks, by contrast, they stand to benefit in terms of what banks and other companies may be able to earn on their loans and investments going forward. I want to focus in on a segment, though, of communication services, a group that's also down in early trading. Video game makers, or as S&P defines them, interactive home entertainment companies. We had concern yesterday about Electronic Arts, that they were going to delay the Battlefield 2042 game. They came out late yesterday, said, yeah, we're going to delay it 4 weeks to mid-November. So the stock rebounding a bit and benefiting the group as well.
Dave Wilson, thank you, sir. Our stocks editor on the sector breakdown. The price action at a sector level, far more interesting than what's happening on the headline benchmark level. Although we do start to move a bit on the S&P, we're negative 1/3%. On the NASDAQ, we're down about 0.5. Up next, your trading diary from New York. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Bet against the consumer at your peril. The message from Ian Shepherdson of Pantheon Economics off the back of a better than expected retail sales report. Equities down about 1/3% on the S&P. A delayed reaction. Yields higher, dollar stronger. We can explore that a little bit more tomorrow. That's the price action. Here's your trading diary. What you need to be looking for through tomorrow, through the rest of today. 1:45 Eastern. The president speaking tomorrow. The University of Michigan Consumer Sentiment Survey. Then the OECD publishing its economic outlook on Tuesday, and a Fed decision next Wednesday. From New York City, for our audience worldwide, going into the weekend, one more day to go. This was the countdown to the open. This is Bloomberg.
If you look at China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently. because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off. These guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. If you do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear, which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stumpf to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay. In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hack emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there, not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Brzezinski.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start. From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it is widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia a regional power. Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor schoolteacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, come to us say,
24
people went for the job. 73 people accepted. I was the only one guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma's an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it served him well.
Peter Thiel is a walking contradiction. He got his bachelor's and Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission.
And several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You had a very special guy.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's energy independence executive order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch. Some people come with an Adobe Illustrator file. And we have a whole design team who then we kind of work together to help create layouts of what it might look like. And scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it. And we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. we bring it over to the aging table, where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.